morning, good afternoon, good evening, whichever part of the world you're joining us from. Global Alliance for the Angel Investor and Venture Capital Networks, Global Council for the Promotion of International Trade, along with our impact investment partner, Tacit Growth Strategies LLC, proudly welcome you all who are joining us from different parts of the world to this prestigious event, Global Impact Investment Summit 2022. I'm Aparna Kumar, the Global Co-Chairperson of GCPIT and your host for the summit. We are on day 3, and on behalf of GCPIT, I wish to express our sincere gratitude to all our chief guests, our 40 plus speakers who are presenting their valuable, powerful sessions in the summit, focusing on impact investment. We are grateful to our impact investment partner, Tacit Growth Strategies LLC, for their unconditional support in this summit. Global Council for the Promotion of International Trade, or GCPIT, is one of the fastest growing organizations based out of India, South Africa, UK, US, UAE, and Europe, with board and council member representation from all over the world. Founded by the visionary leader, Mr. Santosh Ganesh, in the year 2020, GCPIT has been growing at an exponential rate with support of leaders from across the globe. The Global Council for the Promotion of International Trade was founded with the intention of supporting SMEs, startups, entrepreneurs, and leaders. We all know that world leaders across the globe are working towards saving our planet and achieving the 2030 agenda. But are the common people, as one of our powerful speakers pointed out in a session yesterday, the SMEs who are the backbone of world economy, the youth who are going to be the drivers of the future, the startup founders worldwide, the women entrepreneurs who are struggling for their day-to-day survival. Are they all aware of these critical issues the world is facing today? Are they all aware that while building their businesses, they need to think of the people and the planet as well? While every entrepreneur and startup is running around looking for funding, are they aware that impact investors are looking only at businesses that are creating an impact in the community? For ordinary people, what really matters is their day-to-day survival. The millennials and Gen Zs are becoming conscious buyers, but what about our business owners? We only realize and act when our house is on fire. As Greta Thunberg pointed out 3 years back while addressing the World Economic Forum in 2019, we all have to act as we would in a crisis. We should act as if the house is on fire, because it is. The pandemic clearly showed us that SDG 17, Partnership for the Goals, is the only way to move ahead if we have to move faster. That is why CPIT has come up with all these initiatives. The Great Leaders Council, the Global Founders Council for Sustainable Development, and the 18 global alliances, namely the Global Alliance for Water, Sanitation and Hygiene, Global Alliance for Good Health and Well-being, Global Alliance for Future of Education and Future of Work, Global Alliance for the Future of Food and Agriculture, Global Alliance for Industry, Innovation and Infrastructure, Global Alliance for Sustainable Communities, Global Alliance for Clean Energy and Transportation, Global Alliance for Climate Change and Environment, Global Alliance for Sustainable Fashion, Global for Financial Inclusion, Global Alliance for Sustainable Economic Development, Global Alliance for Poverty Eradication, Global Alliance of Angel Investor and Venture Capital Networks, Global Parliamentary Alliance for Sustainable Development, Global Workforce Development Council, Global Alliance for Sustainable Production and Consumption, Global Alliance for Peace, Justice and Strong Institutions, and Global Alliance for Sustainable Media and Publishing. All these alliances were formed to bring together global leaders, global founders, SMEs, startups, women entrepreneurs, youth, and like-minded people who are working like scattered islands to collaborate and work towards a common goal, achieving the SDGs and look beyond 2030 or even 2050. The Great Leaders Council is bringing together leaders who are working on innovation, sustainability, partnership, and impact leadership. And the Global Founders Council for Sustainable Development aims to bring together the founders who are focusing on the triple bottom line while running their sustainable businesses so that they can become role models and inspire future generations. We have a huge mission, Impact Mission 2030. We are aiming to touch the lives of 100 million entrepreneurs and leaders through this mission. And today is the last day of the summit, and we urge you all to stay in touch with us, join us in this humble mission, and together, let us be the change we wish to see in this world, as Mahatma Gandhi said. And before I conclude, I would like to remind you all that the nomination for the speakers for the Global Sustainable Development Summit 2022 is open. You can go to our global website, gcpit.org, and nominate yourself. And as Singapore opens its business to the world and after the pandemic, we are proud to be part of the Business Show Singapore, on 28th and 29th of September. Inviting you all to be part of this huge opportunity. Contact us for more details. You can go visit our website and learn more. And now it's time to listen to our chief guest. To open day 3 of the Global Impact Investment Summit 2022, we have with us our chief guest for today, Mr. Don Lloyd Williams. Mr. Don Williams is the CEO of Princeton Holdings International, Princeton Healthcare Incorporated, and Princeton Technologies International, advisory firms which specialize in financing and developing healthcare and infrastructure initiatives globally. As a global solutions provider, Mr. Williams directs and manages a global team of professionals that support healthcare and technology initiatives for Princeton, as well as for international companies and governmental agencies that are looking to develop healthcare and infrastructure projects which are innovative and sustainable. He was the vice chair and currently serves as the advisor to the United States Department of Commerce's Industry Sector Advisory Committee on International Trade for Small and Medium-Sized Firms. This is the US government's top governmental advisory committee for small and medium-sized businesses. Mr. Williams has been in this advisory role for over 20 years. He also serves as a board director for the World Trade Center for Atlanta, a global commerce organization with affiliates in over 100 countries. And he currently holds a part-time adjunct professor faculty position in international business at one of the top universities in Atlanta, Georgia. Let me proudly invite the chief guest of day 3 of the Global Impact Investment Summit 2022, Mr. Don Lloyd Williams, for his address. Over to you, Mr. Williams.
Thank you very much. It's definitely a pleasure being here and having the opportunity to present at this important conference. I'm actually on vacation, and so I thought it would be very important to be here, even though I am on vacation. So of course my wife didn't care that much for it, but of course I think this is a very, very important event, and I'm glad to be here. I'm going to be, let me pull up my slides. See if I can pull the share screen up here. Give me 1 second, I apologize. I'm having problem pulling this up. For some reason, I'm having a little problem pulling up the slide. 1 second. Can't seem to pull it up.
Tosh, can you help?
and reduce this real fast. Maybe an easier way. Let me just get back into. Let's see. What's that? I'm sorry.
No problem.
Some reason it's not coming up. Oh, here we go. Okay. Let's see if this is loading now. Let me see if I can get this in here. A second. Here we go. Sorry about that, folks. All right.
Yes.
Technology is great when it works, and technology is not always good when you don't.
No problem. We understand.
But yes, it's definitely a pleasure being here. And my focus today is going to be speaking about exploring.
Sorry to interrupt before you start. If you could
No
put
problem, no
slideshow
problem, no
mode,
problem.
it would be
No
better.
problem, no
Okay.
problem.
Okay. Okay. Good. Okay. Thank you.
I'm going to be speaking about exploring new opportunities in impact investment, marketing, and globally. And my focus is going to be primarily on healthcare, which is really important in a number of different markets, both in industrialized countries as well as emerging markets. And so Princeton Healthcare is heavily involved in that. We're a global financial advisory company. We've been actively involved in developing hospitals and healthcare initiatives globally, from India to China to Africa to South America. And our emphasis areas is developing the financial structure for developing these healthcare initiatives. We focus on healthcare and infrastructure, developing hospitals, clinics, and healthcare initiatives. We provide management consulting services, and we also get involved in the technology and integration. So we think that one of the key areas for impact investing, of course, is in creating solutions for sustainable healthcare. Very, very important in most of the markets. And so our focus is to find ways to help governments and international companies and private groups to secure the structure to move forward to create sustainable healthcare in a number of different markets. We talk about, in terms of global areas, we always look at, and this slide is used many times, it talks about the growth in the different markets. And as you can see in blue, the areas that are still growing expansively are a number of the emerging markets. And so there's a tremendous amount of opportunity because the needs are there. There's tremendous growth. Populations are increasing. And these, in each of these countries, be it in Asia or Africa, Middle East, South America, there's a need for better healthcare, better quality of healthcare. And so one of the biggest challenges often is getting the financial structure to move forward, because that's typically a challenge in a lot of these areas. And so our position is, how do we help create that opportunity for moving these initiatives forward? And emerging markets, there's a need for continuous innovations in healthcare delivery. Healthcare costs are increasing, and so innovation is critically important. And so as we look at creating solutions for many of these organizations, we find that one of the key integral parts is the fact that these markets have incredible needs. And so if you can find innovative solutions, it could help these particular markets grow and sustain these healthcare initiatives. The drivers that we typically find is strong economic growth, of course, increased rate of lifestyle diseases. We see in a lot of these markets, cardiovascular disease, diabetes, cancer, But at the same time, we see a growing middle class segment. So everybody is really looking for, having better healthcare. Depending on where you are, people want better healthcare. And increasing literacy rates and public awareness of healthcare is, is important. So we find that, across the board, and in many of these emerging markets, people want better healthcare. They want to be able to have the opportunity to address concerns that they would not be able to in the existing situation that they're in. So we look at trying to create, again, a solution for bringing, a higher degree of healthcare and sustainable healthcare to that market. Other economic drivers, of course, is demand for high quality. You see medical tourism growing exponentially in certain areas where people are traveling to certain markets because they cannot have that opportunity in their own region. And so, for example, you're seeing a lot of growth of medical tourism, for example, in India. And I've seen the transition in the last few years, how India has increased because of their capacity and their ability to provide good healthcare services. And so you're seeing a lot of that movement, especially for the areas like Africa, where, where typically in the past they may have gone to the US and not going to India because of the price point is better for certain procedures. So, but the reality is, if in fact they can have the same capacity in their own country, then of course they would be staying there. And, in these particular countries, we're seeing in many instances increasing of access to having health insurance that will provide a platform for, supporting this initiative in that particular country. Trends that we see, again, demand for private hospitals, typically, from India to Southeast Asia, to South America, Sub-Saharan Africa. Typically, the private hospitals are providing a better, better platform, because they typically will have some of the higher technologies, the state-of-the-art technologies. It'll be more responsive to needs of the market. Public hospitals are sometimes not as well equipped and are not always as responsive to the market. And so we see that the private hospitals typically can really have a significant impact in the market. What's happening in the world, of course, impacts the ability to get some of the funding to address some of these areas. And I always tell folks when they're looking at trying to get funding, is you're competing against the market. Everybody's looking for funding. So, what's going to make your project more important? Even now with the war in Ukraine, we're seeing an increase in interest rates. It's becoming more challenging. And so, when you look at trying to move forward, you got to understand the world, what's happening in the world also impacts your ability to get the funding. So you need to be aware of that in terms of developing a strategy to develop these hospitals and these healthcare initiatives, because, typically, again, what's happening in the world impacts financial structures, impacts financing, be it private or public or institutional. What's going on in the world can impact, your ability to get funding. So I like to talk about sometimes the best practices, things that we see that allow programs to go forward. And this same formula has been important, but it also has been what we consider successful in terms of moving programs forward successfully and across the board in a myriad of different countries. The key components of success is making sure that you have your game together. In other words, having feasibility study, an initial project, establishing the need in the market to market demand, and creating a realistic business and financial model. And when we get into these countries, many times, some of the groups who are actually trying to develop the projects are not as well versed in understanding that these are some of the major and most important requirements to make that project go forward. So understanding that right up front, creating a good platform to go forward with is critically important. So establishing the feasibility business plan, tying it to market demand, and creating a business model and financial model, because we as financiers are going to be looking at, can this program be sustainable? Are we going to be in a position to create something that, once we put it together, we get it up and running, put all our dollars into the project and investments into the project, is this program going to be able to be sustainable? And, critical piece of that is also having the right team. So it's not just being able to have a feasibility study and a good financial model. We're going to be looking at who's the team that's going to be responsible for making this program a reality, because we're looking for people who have a track record and have the experience. So they're not just trying to figure it out. They have already walked the walk, if we can use that phrase. So developing a comprehensive business model. If you're existing, creating historical profile and forecast models. If you're doing expansion, and identifying the right investors, which is what we typically bring to the table, as well as the expertise of running the hospitals and healthcare initiatives. Identifying quality investors who are more sensitive to healthcare initiatives, and then performing at the highest level. So it's not just finding an investor, because healthcare is quite different in regards to getting to a point of profitability. So you got to find the right investment group that can help move your program forward. So we look at, in our corporate model is, market entry, brand recognition when you're creating these initiatives, developing the new facilities, establishing strong programs to promote the highest quality of clinical services, getting state-of-the-art equipment, getting the right team in, and developing high standards for management, performance, and governance. They're all critically important pieces of creating the right platform to move forward. So when you're not just talking about, well, I got to get this hospital up and running, well, as an investment firm, an advisory firm, these are the components that we're going to be looking at, so that we know that the program that you're going to develop is going to be successful and sustainable. In terms of corporate approach, as I was alluding to, you want to have investors and lenders who understand the healthcare market, and then more importantly, many times, is understand the rules of engagement. Every lender, every investor will have certain requirements. You should have a good understanding of what they are before you proceed forward, what their requirements are, what they're looking for, return on investment. Typically in the healthcare area, you would want to have typically an organization, an investment firm that is a lot more sensitive to healthcare and understand the rise time for getting to a point of profitability. And then again, perform with integrity, transparency, and with a move towards getting profitability and meeting the profitability objectives that you're looking for. A lot of the financial problems that we see with these types of investments or healthcare different, whereas that you got to have a slow ramp up period. And so when you're creating the model and the experience, as I said, you can't be too aggressive. You have to be realistic and say, okay, it's going to take us, a year or two to get operational, to get, get the beds filled in that particular institution, to get, the throughput that you're looking for. So you got to make sure that you are creating a model that's realistic, and that's important in terms of presenting a presentation to your investment group, in that you really understand that it's going to take a little while to get this program up and running and be in a position to address the debt that you're dealing with. And so I'm going to talk about some of the real examples of developing healthcare initiatives, some of the things that we've done. Now, I do want to preface this by saying there are a myriad of different types of health care financing structures that we work with that have been pretty innovative in the market. Everything from, of course, debt equity financing, but some of the things that we can do in terms of financing programs through corporate guarantees and collateral securitized funding, just a myriad of, we have humanitarian funding, a wide range of types of funding. So typically we're in a position to address almost every possible need, providing there's a good plan. And so that's what makes us unique in the market in terms of being able to not only understand healthcare, many of my team have run major hospital groups in the US and abroad, understanding healthcare and the challenges with healthcare, but also understanding what it will take for those organizations to grow and be successful. But I'm going to talk about a couple of initiatives that we have done successfully. Example of a program acquisition that we did in Brazil and was heavily involved in. Of course, the challenge was it was highly leveraged, a lot of debt load in the institution. We were able to bring about 100 million in recapitalization into that project by bringing external investors to the project. What made it really attractive was the fact that it was in a very interesting region, had a lot of demand in the market, had a sound management team, but the challenge was actually having access to investors who were a little bit more creative and were willing to take on that debt. And so again, having the ability to go outside of that particular market and bring some investments in from other areas where our investors were looking to get into South America, for example, and find a base to work from was very important in terms of being able to move that initiative forward. And so we were successful with that. Another example, a project that we're developing in Tianjin, China. This is going to be in fact a greenfield project, and we have actually pulled together, actually the first, it says 40 million, 100 million in equity investment. It's going to be 2,000 bed. It's going to be multiple rounds of funding. It's a public-private partnership. And the biggest challenge, when I say in the front was the government, is limited experience with dealing with private and private investors has been the biggest challenge. The need is there, but their ability, how they do business is a little different than what we have experienced, because a lot of their transactions are government to government enterprises. And so when you bring a private investor in, it's really getting in a position to be comfortable with how they do business and them getting comfortable with how we do business. But some of these PPPs can be challenging, but if there is a market demand, there's a need in the market, there's not a lot of healthcare providers in the region, you can be successful. And we definitely see this as being a real strong opportunity for us and for that region, bringing state-of-the-art technology, bringing a new way to do business in the market is going to have an incredible impact. Another opportunity we developed is in one of the Caribbean islands, an ambulatory center. This was a PPE. We found the biggest challenge is an inexperienced team, limited capital in the market. And so we were able to bring a joint venture together with some of our private investors. And while we were able to accomplish that, is we were able to create a story that says there's a growing market demand, the need for ambulatory surgical capacity, medical tourism opportunities was growing, and we could address that by showing the projected financial operating performance was going to be strong. And so we were able to get over some initial issues with, well, why are we going to invest in this market? It doesn't seem like it's going to do as well. But if we were able to create a strong story, then we got the support that we expected to get. to move the program forward. So it was another opportunity for success. So in conclusion, what we always say, the most important way to move forward is always looking at it from a standpoint of start early when you're developing these programs. Do your due diligence, develop a feasibility model that makes sense, create a competitive profile, know if there's any competition, who the competition is in the region, develop a strong partnership, have a good team, an advisory team, such as utilizing Princeton or similar type of organizations that really understand how to develop these programs, and be flexible, select the right types of lenders, and secure the investment. But again, you have to have the right team. You have to do all the pieces that we've outlined in terms of developing the plan, the financial model, understanding the market demand, and understanding the risk profile, developing strong partners with teams that have the experience, and being in a position to then perform once you, in fact, have secured the investment, in a position to demonstrate that you can go forward and show that your program can be sustainable. In summary, we love to have the opportunity of working with you and any of your organizations that are interested. We are headquartered in the U.S. in Atlanta. We have satellite offices in a number of different countries, and are constantly looking for good projects. And we think that this is a very, very, very important area of need. And as we all know, healthcare is always important in these emerging markets, and we support that and look forward to having an opportunity for working with you and our Global Investment Summit participants. And I thank you for the opportunity. And if you have any questions, you're always open to give me an email or send it to my company, and we will follow up with you and see how we can help you move these programs forward. And again, thank you for the opportunity. It's been a delight to share some of our experience with the organization here.
Thank you so much, Mr. Don Williams, for that opening day 3 of our summit with that very informative and impactful presentation. And thank you so much for joining us, even though you are on vacation, and looking forward to working with you in the future as well. Thank you so much.
Thank you.
Now it's time to listen to our speakers with their sessions. To begin with, we have with us Ms. Tripti Datta with a session on delivering breakthrough solutions for social and environmental issues. Ms. Tripti Datta is the co-founder and director at Council of Royal Roots, which is a Section 8 company. She is an author, a businesswoman, a social activist, and a communication and strategic expert. She believes in giving her valuable time to the social cause of empowering young minds, and currently is playing an active role in preserving art and culture, conserving dying water bodies, and protecting environment, heritage management, enhancing tourism, and holistic development of the villages, and emphasizes creating livelihood through her foundation. Her collaboration with numerous Indian colleges and universities to impart training and skill development provides social upliftment and empowerment. Thank you so much for joining us today, Ms. Tripti Datta. Over to you for your session, Delivering Breakthrough Solutions for Social and Environmental Issues.
Thank you. Thank you, team GCPIT. First of all, Aparna ji, Santosh ji, you guys have pulled up a very, very amazing, mindful event, I would say, and I'm honored to be a part of it. From the last 2 days, everyone has been giving their deep insights on impact investment, strategies on impact investment, and how globally the impact investment is contributing at large. Delivering breakthrough solutions for social and environment is very challenging. So I'll just share my screen. And I'll be very honest, it's very challenging because of certain issues that we always face. First of all, there are so many social and environmental issues like hunger, education, equal rights, health, and to cater every aspect of the topic, I would say, requires a unique solution. It's n number of problems, and we have very few solutions to it. Every problem does not only have unique solution, but set of implementation is required in a very unique way. The ground realities are very different, and sometimes the implementation of the organization that organizing is there is not effective. The system is not effective. And then the last but not the least, I would say, the funding issues that we face while solving these environment and social issues. So I believe we have gathered here to understand the possible ways, the challenges, and how to overcome and properly deliver breakthrough solutions and social and environmental issues. I'll just share a brief about myself and the organization before I begin. So as Aparna ji has given a very, very sweet introduction. Thank you so much. I am Tripti Datta, representing Council of Royal Roots, Section 8 company, which is dedicated to conserving art and culture and heritage of India, and working parallelly on education, skill development, and training for the underprivileged with inclusive efforts towards climate heritage program in India. Council of Royal Roots mission is to bring rich cultural heritage and make it more accessible to the wider public and the new generation and international audience. The organization sets out to make rich cultural heritage and conserving heritage, water bodies, environment, and support government initiatives to promote incredible India and preserve India's tangible and intangible heritage, create an impact in the society. As I share my experience and my views on the topic, delivering breakthrough solution for social and environmental issues, I would like to share a quote by Oscar Elkins. Clear measurement standards, high-grade operations, specialized products, and more training for the entrepreneurs can make impact investing a more influential practice. The above quote has been teaching me and guiding me through many ways, I would say, and helping me find solutions to be more impactful as an investor. I would like to talk about the process that I have been implementing to find breakthrough solutions. Actually, they're not breakthrough solution. It's a day-to-day activity that we implement, and they become a breakthrough solution for the issues that are underlining and are, that needs to be catered to. So in today's world, like every social or environment, these above questions, I really want to ask the audience, to myself even, when we talk about solutions and we want to bring solutions, who is responsible for the solutions? Who's making sure the solutions are implemented? And who is making sure the solutions that are coming up are effective? So the questions are so many, issues are so many. But I thank the world leaders, the experienced people who are defining the path for us and helping us make the society better. What they have, the elderly, I would say the experienced people, they have summarized the issues and standardized them for us under the topic Sustainable Development Goals. The Sustainable Development Goals define global sustainable development priorities. These issues can be taken as priorities and aspiration and seek to mobilize our efforts towards them, and we can aim to achieve results and targets and call the worldwide action among the government, business people, the societies, the civil societies to end this poverty, hunger, education issues, human rights issues, and we can create a better life. And we can live a life with dignity, and opportunity can be created for all of us. The SDGs can help to connect business strategies with global priorities. The SDGs can be used for overarching frame to shape, steer, and communicate and report their strategy, goals, activity, and allowing them to capitalize on range of benefits. So again, I will just keep on talking on this. When we create an amalgamation of a business, corporate, other organization, and we prioritize a goal, maybe it a local one, but something that can create an impact in the society. I believe this amalgamation of business and global goals, SDG, solves many problems. It helps with breakthrough solutions and ease in implementation. And most importantly, the funding issues are solved. And this work is smoothened. There are a lot of benefits to both the entities. For an example, I can say a business corporate would like to choose a goal that aligns easily with the business profile. So it's an advantage to the business entity. The high priority goal that is chosen needs a systematic approach for the implementation. Again, that is a ease of implementation, and the SDG goal or the required solution is getting that attention. So the amalgamation of both the thoughts is very, very, I would say, benefiting both the entities and benefiting. And when the aligning the goal with the business activity is done, achieving high impact returns on investments are possible. So it's just not that the investment is being done, but there are a lot of benefits the business itself gets. I am from a business background as well as very active on the social front. I understand this amalgamation is very important and helps both the entities. But when I talk to people in the business or the investors, they will always want to know what is their benefit. As a businessman, it's a very understandable mindset. So I tend to talk to them about how their business is benefiting while they are investing in very impactfully. So I would say identifying future business opportunities. Like for an example, I'll take April company is investing in skill development in the remote village. In the future, it's a possibility that the company can hire the trained labor. So it is creating an impact for them. They are being educated, they are being trained, they are being skilled for a particular earning in future that they can get. So they're getting an impact, while it is also creating a future opportunity for the business. The business can hire them cheap skilled labor and skilled labor in the manner their standard. The standard that they require for their company, the skilled labor is available. The same labor will enhance value to the corporate for sustainability. Now, the people who are being trained in a manner to be there for a particular work, they are sustainable for yours, and they can help the corporate to be sustainable for yours. It's like a vice versa, helping both the things. Then again, this will make sure the company is being benefited and stakeholders are being strengthened, that relationship, and is also giving them the edge on policy making. Like for an example, that company is there in the field working with the laborers, benefiting them, creating an impact. Why wouldn't a government go further and ask that particular company to join them in making policies? So it will strengthen stakeholder relationships, give the company an edge in policy development, which is a growth not only just on the ground, but on the, I would say, professional front for the company. Then the constant growth helps in stabilizing societies, markets, and benefiting the growth in the market. Everything is smooth. Like for example, the company is smooth, the market is smooth, sustainability is there, the company is growing. That is again an investment, impact investment, return on investment that a company is getting. One impact investment leads to using a common language and shared purpose for all. So basically, if we see the company that invested in skill training got a lot of return on investments. It was an impact investment and they got a lot of return on many levels. And it continues over the years. So that is how we show or we talk or we figure out that how we find solutions while we bring in business and they create impact investments. So it's like the amalgamation that I believe in has to be there if we want to sustain as a country, I would say, as in business, as in impact investors. I would like to explain my thoughts further with an example and a diagram of this mapping the value chain. The mapping does not entail and detailed, does not give a detailed assessment of each SDG, but it highlights the high level impact areas in the system. The map. So for an example, I take the example of logistic company, which deals with impact areas. The suppliers. The suppliers in India mostly are the truck drivers, the rickshaw pullers, and they lack the facility of clean water and sanitation. What if the company invests in providing them a proper clean water and sanitation? The company is serving for SDG 6 and does not have to go beyond its business system. It is doing what is required to as an employee, creating a small facility and creating a greater impact. It does not have to go out of the blue to help or do that impact investment. Secondly, if we go the company operations, the HR department, the other departments who are benefiting the employees like SDG 8, if they provide decent work environment, decent work hours, economic growth for in an individual and others, it is the company is catering to say SDG 8 and it is helping the person, the individual to grow and is giving them in a decent environment. The company again does not have to go out of the blue to help them or create a breakthrough solution. They have to go in some remote area and create an impact. They are investing and they are catering to the issues while in the business system. So it is again helping both the parties. Thirdly, the product use. The product the company is selling is aligning with the climate action. They're helping the environment. So the company is again catering to SDG 13 and does not have to go out of their business system to create an impact or invest in such a area where they feel a bit of stress. So these kind of things, I believe, can be a solution to the minor problems that creep in without our noticing. There are so many issues that we go beyond, but as an investor, where I talk to the people of in business corporates to give their CSR funds, to give their business grants, they want to know what is the impact that they're creating, and they don't want to go out of their comfort zone. So these are the small solutions that we give them initially, but when they get those ideas, they tend to grow in the same field of impact investment. It's not easier for a new investor to come up and give their grants until and unless they see those changes. Again, I believe engaging in partnership, the managers and thought leaders have effectively agreed that addressing sustainability issues cannot be carried out in isolation and appreciate the value of collaboration. In general, a company can explore at least 3 types of partnerships. A value chain partnership in which the company in the value chain can contribute skills, technologies, and resources and bring new solutions to the market. Sector initiatives that bring several industries leaders together in efforts to raise standards and practice to overcome shared challenges. When there is multi-stakeholder partnership for funds, I would say partnership with governments, private sector, civil society organizations, and so many other organizations come forward to tackle issues. Then multi-stakeholder partnership for funds, grants from the corporates, donations by individuals, CSR funds by the corporates. It's all welcome, but coming to a very definitive results needs to have system, needs to have a approach where changing your ideas, maybe because where we're sitting in the room and deciding to a solution might not be workable when it is on grounds. So that elasticity has to be there with the groups that are coming forward. That engaging in partnership does not mean just providing funds, but to have that flexibility and acceptance towards the solution that needs that is created to have that result that we want to achieve. So it is very, I would say, important, and yet a very complex area where a lot of things needs to be figured out when we are solving and we are coming together, when the corporates, the government and other individuals, societies are coming forward for helping us. Engaging in partnership also helps. Sorry.
Ms. Tripti, sorry to interrupt, but a gentle reminder about time.
Oh, sure. I'm just ending up, and thank you so much all for hearing me out. And I am really honored to be a part of this event.
Thank you so much for that very inspiring session, Ms. Tripti Datta. As you said, delivering breakthrough solutions for social and environmental challenges, and it's really challenging. I'm sure our viewers would take inspiration from your efforts and journey and take action as well.
Thank you once so again. Much. Thank you so much, Aparna ji.
Thank you so much. Next, we have with us Ms. Upasana Sharma with her session, Latest Market Trends in Impact Investing Sector 2022-23. Ms. Upasana Sharma is the CEO and founder of Investor Quotient Canada Incorporated with expertise in law and venture capital. An expert in the Canadian Startup Visa program, Upasana has successfully launched several global startup companies in the Canadian market. An accomplished Canadian lawyer with an entrepreneurial spirit, Upasana helps startups and international businesses turn their vision of entering Canada into reality. She, being an entrepreneur and an angel investor herself, she understands how hard it can be for business owners to move to a new country, start a business and raise capital. Blending her acumen for business development with her vast network of leading investors, business consultants and top-notch lawyers in Canada, Upasana ensures her clients have the necessary support, mentorship and knowledge to strategically and successfully break into the Canadian market. Thank you so much for joining us today, Ms. Upasana Sharma. Over to you for your session, Latest Market Trends in Impact Investing Sector 2022-23.
Thank you, Aparna, for such a generous introduction. And thank you, Santosh and Aparna, again, for bringing together such a humongous event together for 3 days and getting all the speakers on such an important aspect, impact investment. I'm truly honored and I'm really appreciative that I was given an opportunity to be a part of this. On that note, I will start with my presentation. I know you guys have been on time all these days. I don't want to change that. So I've been given a very interesting topic to deal with, impact investment, coming changes. Before I jump into what those changes are, I'm sure that you are all hearing about impact investment for a long time. I just want to give a tiny bit of my understanding of how it is. For me, impact investment shows a complete change in the investment world, as the growing number of investors are looking beyond simple financial returns on their investment. They want their money to fund the companies that are committed to a better world as much as they're committed to their bottom line. In very simple words, what impact investment indicates that investor wants a direct connection between their value-based priorities and principles and how their capital is being used. What they want more is transparency, whether the companies they are investing their money, how much they are socially responsible. Are they producing social benefits in addition to delivering financial returns? I was just hearing Tripti and the kind of examples she was giving, how companies can do it is actually very simple. For impact investor like me and my colleagues, the most crucial factor is when I'm investing my money, what is the tangible social good coming out of it? What is a positive outcome for the society and for the environment? There is a growing demand from the investors this growing demand amongst us has actually proliferated a lot of impact funds also, which are trying to integrate ethical considerations with investment process. Now, just a little bit about impact investment funds and how they are different, and that's why I can jump into the trends then. These impact investment funds have an obligation to not only report on the financial performance, but they also try to quantify a positive social impact the investment the fund is making is having. That's what an investor like me is trying to look into. For example, if I'm investing in an edtech company, how many underdeveloped country school they were able to support? Were they able to create something better for those schools, which other people with haves have everything in those schools for? And what helps us as when we impact investors become a part of an investment fund is that we have a greater control on the management of these companies. We execute a little bit more control of how these companies use their funds, which in turn helps us to deploy funds and services and causes that were usually not directly addressed by the public financial markets. On that note, let's go into what has happened to impact funds and impact investments over the last 10 years and where the trends are looking for. I remember in 2010, JP Morgan and Rockefeller Foundation together with Global Investing Network published a report claiming that they were expecting that by 2020, that emerging asset class, which is impact investment asset, would be around 400 billion to 1 trillion. And I must admit that many of the conventional investor listening to these things from these reports thought that these predictions were overambitious. But come 2020, our doubts were misplaced. Socially responsible investing, where impact investing becomes a part, was not an overnight sensation. It happened over time. According to the US Forum for Sustainable and Responsible Investment, socially responsible investing grew to 3 trillion in 2020, 12 trillion in 2018, and to 17.1 trillion in 2020. So within 2018 and 2020, we saw a 42% increase in impact investment assets. And I can tell you, this trend is not showing any sign to slow down, because as the research coming from the financial industry currently indicates that 85% of the general population and about 95% of the millennials are interested in sustainable and impact investing. There is no doubt that accommodating an investor's desire to do good with their expectations with a good return on their investment is very challenging. It's not an easy task. And it becomes even more challenging considering how complex is the ESG analysis and difficulties in quantifying social good, or the proliferation of so many financial methods of how socially responsible investment should be. But good news is, impact investment, which is a positive step towards a better world, is growing and the future looks very bright. Data shows that in March 2021, impact investments grew to a whooping $266 billion in the US market alone. According to Bloomberg, by 2025, global impact investment assets are expected to reach over $53 trillion. And other data coming from the financial industry also indicates that by 2025, 1/3 of the total projected assets under professional management will be impact investment assets. With such a remarkable growth in the last 10 years, we must be wondering what's going to be looking like in the next 2 or 3 years. So when I was approached to pick up this topic, this was very interesting. And when we did the research, it is very important for me to bring forth some of the historical trends which can shed some light of what will be coming next and how these trends would focus on. For one thing, we all know that a decade ago when JP Morgan and Rockefeller came out with their predictions, climate crisis, economic inequality, gender disparity, racial injustice, and other prime targets, crises were already prime targets, and they were the solutions which were supported by impact investment, because these problems were posing a threat to the governments around the world. Now, we also know that right now, as per UN, we have $2.5 trillion annual gap in the funds needed to to reach the sustainable development goals by 2030. We also know that COVID-19 has changed the thing so much. It has devastated and disrupted the lives of people, economies, and the government actually has to reallocate their resources to take these new crises, new threats to survive during this disease. With this development, it is absolutely critical that not only the private impact investment will be key in funding SDGs to cover up that 250 trillion gap in funding that we have, but it will also play an important role in finding solutions to problems which were conventionally seen to be solved by government or public fund, because government have put their resources somewhere else and the impact funds would be coming to cover up that gap. Given these pressures, we see that impact investment is focusing more on the following sectors. So, climate crisis. As the scale and the severity of the environmental challenges which are being faced by people and the government is increasing by day in terms of droughts, extreme weather events, extreme heat waves, disruption of agriculture, breakdown of ecosystem, it is causing billions of dollars in losses to the government. So it was prudent for any investor to go and look how it's going to impact their conventional investment portfolio also. You can't escape from the billions of dollars of losses happening to government and industry, and you think your investment would be there as such. As a result, impact investors are focusing on the solution for climate change, and the solutions which will help with climate crisis. And that has one positive impact. It has now brought the solution from climate crisis to be just limited to the labs or a discussion stuck to the halls of government, now into a center point in the corporate boardrooms, as well as stock markets. Now, again, let's looking at the trends here. Much of the impact investment over the last decade was focused on minimizing the increase in global temperatures or climate change mitigation. In 2017 and 2018, mitigation projects made up to 93% of climate finance. Now, renewable energy options, which are the part of this mitigation, was up to 53% of finance in 2017 and 2018. But we see a shift in the trend in 2021 in the climate finance sector, as investors can now find a growing options to support communities which are struggling with climate change and achieving net zero carbon emissions. So from mitigation, now we are trying to adapt. Can we live with it? How can we reduce carbon emissions so we don't accelerate it? So the current trends in climate finance could be categorized in two ways. First, we are seeing that impact investors are making investment in businesses focusing on offering products and services to enable smart cities, circular economies that tackle climate issues through adaptation and resilience. For example, there is wastewater management firm Roseworth in India, and now they're growing their operations into Africa. They support solutions, they support technologies that allow for sustainable water use in industries ranging from tanneries, steel plants to paper plants. Zephyr, a power company with renewable power energy firm, it is developing a 50 megawatt wind power plant in Pakistan coast. Second trend which we are looking is institutional investors are increasingly transitioning their portfolios to net zero greenhouse emissions by 2050. And the forestry sector has got the maximum benefit out of it. And it was a natural choice because it is this one sector which not just reduces, it just not only avoids the greenhouse gas emissions, it actually reduces the greenhouse emissions. And plus it supports around 1.3 billion people around the globe with their livelihood. According to the Principle for Responsible Investment, the total amount of global institution investment in forestry has increased from 100 billion to 100 billion, from 10 to 15 billion in 20 2000s. Again, the examples and leading example is what is Komaza is doing in Kenya. What they are doing is they're challenging the deforestation through microforestry. They are approaching small farmers, giving them funds to actually grow trees on their otherwise unproductive land. And once the trees are grown, they're actually help sell the timber into the market. So they're helping with deforestation. They are also creating long-term environmental benefits and long-term source of revenue for these marginalized farmers. On this note, the second trend, what we are seeing is, along with the climate change, historically, what we saw was there was very little that the private sector was expected or willing to do about inequality, especially in the name of free market and capitalism in the last few decades. But as the businesses and big enterprises increasingly recognize their responsibility to stakeholders and not just shareholders, we saw this transcended into the impact investors as well to act and invest in companies to help with systemic racial, gender inequalities, particularly when it comes to access to capital and economic opportunities. Now we are seeing increasing impact investment trends for diversity, equity, and inclusion. And very simply, this could be categorized on backing diverse entrepreneurs. For example, Citigroup Bank of America made $1 billion pledge to address racial wealth gap. Twitter announced $100 million commitment to Finance Justice Fund, which aims to bring $1 billion capital from corporate and philanthropic partners to the underserved individual and communities in America. In 2019, private equity venture capital and private debt made $4.8 billion in investment focused on benefiting women, up from $1.1 billion in 2017. The second trend we see is that now investors are now investing more into technologies to reach out to people outside the cities. Up till now, we focused on metros. Metros were growing GDP, but as the impact investors are focusing on inclusion, they're also focusing on companies which are developing technology that can bring these people on the peripheries, which were left behind, into the main scale economy. One of the example here is a company, LoadShare in India. They string together small local logistics providers to create a delivery chain that reaches remote areas. The company has around 6,000 workers and suppliers in its network, and over the past 4 years has expanded around 18 Indian states, and there is a major impact investment made in this company. iMerit is another example, founded in 2012. It annotates and organizes data for global companies, and because it is also focusing on people on the periphery, we have seen impact investment going into these kind of companies and businesses. Then another focus of impact investors are when it comes to diversity, equity, and inclusion is aggregation of demand for small buyers. The impact investors are always concerned about affordability and geographic reach of many basic products and services. And we saw that how COVID-19, when it broke all the supply chains, how an affordability became an issue. The focus is now trending towards how small suppliers and small-time buyers and small-time producers, they could be aggregated and given the same support which bigger organizations have. So it is very clear impact investment is growing. It is taking up the space which was typically whatever the goals were within the government or public funds, where they are now coming into the private investment fund, and which is a better future. And one of the reasons for that is that the millennials are the fastest growing investor group, and they are also between age 25 and 40. And they are now acquiring and building their wealth. They are no longer core tangent market for any companies from a retail perspective only. And the distinction is that these millennials, they want transparency. They want to see where their money is being invested, where it is coming from. They want this world to sustain. They want to make investments value-based. So there is a kind of more pressure on the big corporations to come clean. What is happening, what societal benefits are coming with this. And with this change in the attitude of the investor, consumer, the pressure is going to be continue towards an investment or the operations of the company in such a way that there are tangible societal benefits. We no longer focus just on the return or an investment in terms of finance. We focus how an individual's investment is making this world a better place. How are we going to sustain it, come out of the crisis that the entire global community is facing? And looking at these factors, it is very easy to say that in 2010, the predictions which were made about global investing, which were considered to be very aggressive at that time, were proven to be achievable in 2020. Following the same trends, impact investment is going to grow. It is going to become bigger, and there will be more money in the impact investment assets. And as somebody says, at this rate, there are assets managers are actually launching around per week one new impact investment fund. At this rate, we are looking at impact investment being nearly half of the professionally managed assets in the next 10 years to come. Thank you so much, Aparna. Aparna, you're on mute.
Sorry for that. Thank you so much. As always, that was a very powerful and very impactful session on latest market trends and impact investing sector. Thank you for joining us today. We know that you are traveling and it's crazy to manage with all these changing zones. Thank you so much.
Thank you, Aparna, again, and thank you again, Santosh, and the entire GCPIT team. You guys are doing so much to bring the whole global community together through these webinars. You have changed the face of how we used to do webinars, and thank you so much for the opportunity. I really appreciate to be the part of this growing family. Thank you.
Thank you. Thank you so much for all the support you have been giving and you are still giving for GCPIT. Thank you so much.
My pleasure. My pleasure. Thank you so much.
Thank you. Global community for impact investing. To speak about this topic, we have with us Dr. Prasoon J. Mishra. Dr. Prasoon Mishra is an investor, co-founder, advisor, board member of several US-based corporations. He is the co-founder of Precision Biopharma Incorporated, an antiviral drug development company, and Agility Pharmaceuticals, a technology-driven pharmaceutical company committed to revolutionizing drug discovery and development. He serves American Association for Precision Medicine as the founding president and the chair of WISE, World Investors and Entrepreneurs Society, an investment collective with a global investment footprint. He also served as a founding investor advisor to Barcelona Ventures, is a part of a few angel groups, and serves as an advisor to a few venture capital and private equity firms. Dr. Mishra, a serial entrepreneur, has also served as an advisor to several venture capital funds. He is a mentor to several startup accelerators, including IndieBio, California Life Sciences, J Labs, Johnson & Johnson Innovation, and notably is also founding partner in the Silicon Valley-based M7 Accelerator. Due to his unique perspective and selfless service, he is a highly respected and sought-after mentor to many. Over to you, Dr. Prasoon J. Mishra, for your session, Global Community for Impact Investing. Dr. Prasoon, you are on mute.
Oh, thank you. Thank you, Aparna-ji and the team for the invite, and pleasure to be here and happy to share some of our experiences that we have been, having in our community actually. And, so let me just share my screen with you. And so is my screen visible? A thumbs up?
Yes, perfectly. Yes, perfectly.
Wonderful. Yeah. So I think as Aparna-ji mentioned, the topic is global community for impact investing, and we'll be focusing, more on precision medicine and impact investing. And so as with the advent of COVID, we all are, aware of, a lot of aspects of precision medicine. What we're moving moving from past, which is a symptom-based medicine, to present, which is a pattern-based medicine, to a future, which will be an algorithm-based medicine. This is already here. Future is here, but it's not evenly distributed. So we have the goal is that when a patient shows up to your hospital, integrated omics analysis can be done. That'll be combined with imaging, and personal molecular classifier would be developed where each new patients, their data can be run through, and we can figure out what disease the patient has and what are the drug combinations or drugs alone, and the patient will respond, and the physician can deliver the promise of precision medicine. That's the right drug to right patient at the right time. And the global pharmaceutical community is now moving to open innovation and symbiotic collaborations, more precision-based, algorithm-based, also encompassing digital medicine within their precision medicine-based approach, and sort of taking patients as a consumer's model that will evolve as per payers and governments being their basically customer focus, and a model of co-innovation so is being promoted, and it's happening, and I'll show you some examples within the talk how we have been doing this actually. Let's see. Yeah, so we are an American Association for Precision Medicine, which is headquartered in San Francisco Bay Area and California, and we are a nonprofit. Goal is to accelerate the field of precision medicine through research, education, communication, and collaboration to foster new medical breakthroughs. So we bring together 4 P's of precision medicine, that is patient, providers, public health planners, that is government, and payers, to work together to achieve the goal of delivering improved outcomes. And initially we did a lot of market research and realized that there is a data gap in the data analytics community. So we created a data community. So if you're interested in data, and we have a data AI community, which is backed by some of the biggest Bay Area companies, including Google, Oracle. So the whole community meets once in a year in Santa Clara Convention Center, which is in San Francisco Bay Area, and it attracts world leaders. We also have an innovation center. So AAPM is an innovation-oriented team, and innovation is one of our objectives. So we have invested and spun out several companies within our nonprofit ecosystem, and we are also gearing up to create a precision medicine institute, which will have a research and development facility, clinical trial coordination, and a central data screening facility, as well as a discovery engine actually. So this is that's the in general kind of overview of the ecosystem. But what we have done is, what I would like to focus is, AAPM has always thought that there would be always a need for impact investing to push the field. So we created AAPM Angels and Investors group actually. It was called AAI, and the healthcare investments were impact investing was the focus. And as the group grew, it the investment focus also increased, and it kind of mothered or fathered the World Investors and Entrepreneurs Society, which is which now is a global society with investment focus areas in health and well-being for all, economic development, energy, climate, aerospace, education, film and OTT, technology, agriculture, and real estate. So we have some of the biggest funds that are part of this collective, and we make collective investments in promising companies worldwide. So causes and initiatives, we have I can highlight a lot of initiatives, but I would focus on our coronavirus task force. So AAPM created the first global coronavirus task force when the COVID-19 hit. Actually, this is the global network included over 315 groups. Actually, these were companies, CEOs, CTOs. So these are C-level executives that were that came together to disseminate strategies for COVID-19. And we had a data science group, a strong partnership groups, prevention and policy group, diagnostics, therapeutics, supply chain, impact investments, content and media, and mental health, because COVID-19 crisis is a mental health crisis. So we built a very unique ecosystem where experts and corporations provide domain expertise, mentoring, ecosystem connects, and funding and data-driven innovation. So we have mentoring, expertise, ecosystem, and data. The community is huge. We have, with our partners, we have reach over 1 million patients and about 25,000 professionals and over 500 startups within our ecosystem. And the way we the task force handled COVID-19 pandemic was in a stepwise. It's with a patient journey. How the patient gets exposed and how it journeys through the system. First, how to prevent. We created a lot of awareness system where our media group articulated and circulated a lot of content how to prevent the spread. We also created several algorithms that predicted where you should travel and where you should not. One of the algorithm even predicted where will be the next outbreak, and we did some our predictions were very, very accurate, and we were surprised to see those areas, the newspapers highlighting those areas as hotspots that were predicted by the algorithms, actually. So this was, I was very much impressed. And can we quickly diagnose and treat? So we did a lot of early antibody development. ACE2 antibody, was developed within the group. And we also devise strategies how to do monitoring and alert systems, actually utilized to quickly diagnose these patients. And we also focused on effective treatment. How can we come up with new drugs or repurpose existing drugs to treat COVID-19, especially ARDS, which was killing most patients. And we spun out Precision Biopharma, funded it initially to bring an oral drug to market. And we also invested in how can we assist physicians for their surgical needs and surgical continuity. How can they do remote surgery? And of course, post-pandemic mental health footprint, we created a mental health task force that has grown to be a wellness initiative now and helping thousands, actually. So I'll just highlight one of the therapeutic aspects. So so this is the Precision Biopharma. The task force spun out. We have PB004, which is a great choice for COVID-19 treatment. It's basically has 4 mechanisms of action. It is potent antiviral, it is immunomodulatory, also anti-clotting, avoids stroke and heart attack, and it's anti-inflammatory and stops cytokine storm. So this is a drug that's and it's an oral drug. So we believe that this is the drug that is ready to face all the challenges associated with COVID-19. So we also created a cancer and COVID initiative during COVID-19. What happened is cancer patients didn't know how do they react to the because the hospitals were closed, centers were closed, so the comorbidity cost for cancer patients was high. So we created a digital health interface in partnership with Grid Health that was available, as well as we brought in a lot of experts, even physicians who were cancer patients, and they shared their experiences, how they are dealing during that crisis. So this is an amazing resource for cancer patients. We had a world's top organizations were part of this initiative. We also brought together the world's first COVID-19 global summit, where we brought together leaders from Stanford to Pfizer, together to brainstorm how do we handle this further. And and then in the second wave, what was happening in India, which was devastating, we created a task force on the floor, and the task force was active, and we created a coalition, and coalition was able to send multi-million dollars worth of equipments in India. We collaborated with CARE Foundation, Anupam Kher and Kiran Kher's foundation. They helped us to distribute these supplies within India, and we had volunteers that were also working on the ground to distribute food in pandemic affected regions. So we are blessed to have some of the leading companies as our supporters. We are grateful for generous support for individuals, corporations, and foundations that share dream to accelerate and scale precision medicine, and I will leave you with this. Nothing is impossible. The word itself says, I'm possible. Thank you very much, and great to be here.
Thank you so much for that impactful and very inspiring session, Dr. Prasoon J. Mishra. It was great to know about the efforts behind the coronavirus task force and the activities you have been doing. I am sure our viewers would have found great value from this session. Thank you for joining us and enriching us with your experience.
Thank you. Great to be here.
Thank you so much. Next, we have the session, Strategies for Blended Finance and Impact Management by George Black, founder and Chief Executive Officer, Live Truly Free, United States. Mr. George Black is a business expert who guides entrepreneurs to focus on their passion, build great companies, and live truly free. He is the author of The Next Level Entrepreneur and has helped lead 19 companies to $1 billion in combined revenues with an average 5x growth rate. This includes 6 startups and 1 turnaround. He has over 25 years of experience in 24 industries and has guided numerous other companies. Now, George has launched Live Truly Free, a lifestyle for entrepreneurs to guide many entrepreneurs and business owners to experience greater fulfillment and create a sustainable, profitable growth. Let's listen to George Black as he speaks about strategies for blended finance and impact management. You are on mute, Mr. George.
There we go. Can you hear me now?
Yes, perfectly.
Great. Well, thank you, Aparna, and good morning to everybody from Texas. As Aparna said, I'm George Black, and I'm so pleased to be here at this prestigious event, fascinating topics, and just love the international and impact and all of that. So what I'm going to talk about is from the perspective of inside the company. Like Aparna said, I've helped lead 19 companies over the years, 5x growth rate, combined billion in revenue, and I've seen a lot. And so I want to just jump right in with this story. So I'm going to tell some stories and illustrate, and I want to give you guys some real guide points to how you can be impact investing, or if you're an entrepreneur, these are going to be great tips on going to your next level. A while back, I was approached by a high-powered real estate group, and they were going through a leadership change after about 10 years, and the board of directors wanted to have new strategy. And so they approached me about helping them come up with some new strategy. And I said, great, love to. Where are you headed? And I think it's just crickets, no answers. And the thing is that if you don't know your direction, you can't develop strategy. I mean, how do you develop strategy if you don't know where you're headed? This group would, if they didn't have direction, what would happen is you would simply develop tactics. And so where I'm at and where I'm headed is to impact entrepreneurs across the globe and guide them into who they're intended to be. And we do that through our website, livetrulyfree.com, our YouTube channel, Live Truly Free. And we want to help every entrepreneur build a great company. And I want to illustrate this with one of the clients that I want to illustrate this with one of the companies actually that I've helped lead, and it was Rackspace Hosting. And this was in the early days of Rackspace. It would become a global leader in hosting, and still is today. And they had a great, and I wanted their direction where they were headed was very good statement. And it was to be recognized as one of the world's great service companies, along with the names of Lexus, Nordstrom, and Ritz-Carlton. And that clarity of direction is so helpful. And so as I've helped lead companies, what I've discovered is you've got to know that first. And in this talk, I'm going to share two key things I do to help entrepreneurs build great companies, and then also how to live truly free. So I need to orient you just a little bit. And so the statement, like the Rackspace statement of building a great service company, that's imagine you're on a plane and you're looking out toward the hills or the mountains, and it's a very thin line way off in the distance. Maybe they're purple, maybe they're blue. You can barely make them out, but you know you want to go to the mountains. That's what you envision. That's where you want to be. It might be 20 years, 30 years. It may be a lifetime away. Okay, well, to get there, you're going to have to you have to decide where you want to be in 3 to 5 years. And that's the next question. So where are you headed? And then where do you want to be in 3 to 5 years? That's what I call a next level. And a next level is kind of like over the hill, and you can know what it is, but you can't see how you're going to get there. I'm going to illustrate that in just a minute. And then to get to your next level, you'll go through multiple next steps. And the next step is 6 to 12 months. It's you can see how to get there. And so multiple next steps take you to your next level, and multiple next levels over the years take you toward what you envision, where you are headed. And this allows for lots of pivots along the way, I'll just add. So Rackspace had, they brought me into, I was meeting with the CEO and the top VP over a couple of weeks, actually. We'd meet one or two times a week. And the question on the table was, I asked him, I said, so where do you want to be in 3 to 5 years? What they told me was, well, George, look, let me explain technology to you, like I didn't understand. It changes every 6 months. You can't know where you're going to be in 5 years. It's just a rapidly changing environment. And I said, oh, right, yeah. Okay, so where do you want to be in 3 to 5 years? These meetings, it got kind of tough because what was happening was they were hitting what I call a success barrier. Now, success barriers keep you from, it's like a plateau, and you plateau out, but it can look different ways. For example, with Rackspace, their revenue was growing. The company was growing. They were probably at about, I don't know, 70, 80 million at the time when we started these conversations. But what they had done was they had lots of 1 year next steps, but they had no they had big direction, but no next level. But with other companies, it can look like you hit a revenue level and you go above it, and then you fall back. It can be personnel. So you add people, but you lose people, and you can never get the company to grow, or you want to expand into greater territory and you get into one territory, but you lose one, or product, you add products, but then others you can't keep up with. And so it's like you're bouncing off of a ceiling. And I developed a process years ago called the Next Level Navigator. And it's a strategic process to help you break through to your next level. And the thing about next levels are they feel insurmountable. They feel like you're defeated. it's weird because you can be having a successful company and you just can't seem to break through. So I want to show you a graphic that illustrates this, and I think it'll make a lot of sense. So this triangle, I got to put on my glasses here, so there's 3 legs to the triangle, of course, and at the top of it is like your next level. It's where we want to create sustainable growth and profitability. And my key is with Live Truly Free is with greater fulfillment. And so you start at the lower, either corner at the bottom. You can either be mapping your direction or understanding your numbers. And you've got to do both of these things. And I know this sounds really simple, and it is, and it's really hard to do, okay? So with mapping your direction, and that's what I've been talking about, you got to know your direction, and we want to take those strategies into actions. And there's 2 levels of strategies. They're your next level strategies, and then they're your next step strategies. And the key to my process and the key to what I have discovered over all these companies, and I guide other companies and things like that, is you have to have your strategies sourced in your passions. And if you don't have passion for what you're doing, when the headwinds hit, like tough economic times, pandemics, all this stuff, all the things we're talking about in this summit, your passions are the gas in the tank. That's what gets you going and keeps you going in the tough times to break through. And then on the other side, it's understanding your numbers. And I'll get into that in just a little bit. But let me go back to the Rackspace story. I'm going to talk on the mapping direction thing, because this would be the breakthrough moment. So the CEO is getting pretty frustrated with me after a few weeks. And I'm like, yeah, they may not keep me as a leader around here very much longer. And so in one session, I'll never forget it, he slams his pencil down and he goes, I don't know, to be the #1 in managed hosting. Now, I didn't know what the next level would be, but I know a next level when I hear it. And that was it. And from there, we developed the next level strategies, the next step strategies, things like in 5 years to be not only the #1 in managed hosting, $1 billion in revenues, go public. The sun would never set on Rackspace, so there'd be offices across the globe. And here's the amazing thing. It all happened. Within 5 years, they were public. Within 5 years, they were the #1 in managed hosting. And here's the most fascinating thing. They grew 8 to 10 times. They didn't hit $1 billion, but they were really close, like 800 million or something like that. And this was a breakthrough. We broke through to a whole new level. And so knowing where you want to be in 3 to 5 years is so key. Now I want to talk real quickly about the number side. And this is understanding your analytics, not what everybody else's analytics are, what other people say. It's got to be specific to that particular company. And I want you to think about it like in the olden days, we used to have an odometer on our car and we had a gas gauge. And now we have all the fancy computer stuff. But the odometer is a lagging indicator. It tells you how many miles you drove, right? And the gas gauge is like, so it would be a little needle, and it used to have an E and an F, at least in America, for empty and full. And the gauge would be, so if the gauge was about here, you had about half a tank of gas left. And if you knew, okay, I got 20 gallons, and that means I got about 10 gallons, and I got about 200 miles I can go. Now the computer calculates all that for you, but it was more fun back in the olden days. All right, so this is just like, now let me tell you how most entrepreneurs work. Put a piece of tape over the gas gauge, put a piece of tape over the odometer, and that's how they operate. They don't operate, they're operating off of gut. It feels like, do I have any cash in the bank? And what you've got to have are these indicators that tell you what's happening, what has happened, but more importantly, what's going to happen. And here, gas in the tank, in that analogy, gas in the tank is cash. And you know, if you've got tape on the odometer and the gas gauge, I promise you, at some point, you're going to miscalculate and run out of gas. And so many entrepreneurs hit these walls and they don't know what happened and they're surprised. So at Rackspace, I led a team to roll out an economic measure called EVA, economic value added. And I'll get kind of little wonky here, financial, but it's basically internal rate of return, blending some profit and loss measures into a formula. And it's really cool because it gives you a really quick metric, single metric that kind of pulls in elements of the balance sheet and profit and loss. And before I've completely lost the audience, let me tell you, you don't have to have EVA to do what I'm talking about, okay? But I've developed a couple of tools that really illustrate just from the name what entrepreneurs and the investors in their companies need to be looking at. One's called the cash accelerator. You got to be looking forward. You got to look at what's happened on cash and you got to be projecting it. And the other is the profit predictor. And so knowing where things headed and what it looks like, and because the profit predictor is going to be telling you your future cash flow. Now, there's a whole lot more there and I can get into, but the other thing you have to have are custom metrics and analytics tied to where your strategies are headed. And I want to add one little thing on that, is that I spent, so in my book, I've got a whole chapter, it's a small chapter on strategies versus tactics, because most people think tactically. And I was like, what's a simple way I can boil all this down? And I went to U.S. Army War College thinking and the United States Military Academy at West Point thinking and all this. And here, I just want to read from my book, The Next Level Entrepreneur, just this simple sentence. And it's a successful strategy shapes the future. A successful tactic achieves an immediate objective. Now, you want, as an investor in impact investing, what are their strategies that are going to impact the future? And if they don't have that, if they're just achieving immediate objectives, they've got to have strategies. And that's what I look for if I'm investing in a company or if I'm going to guide an entrepreneur. And you need metrics that measure that progress on that strategy. So a little bonus here, what's behind all of this? So I was actually sitting in a Rackspace meeting, and I thought, you know, and I'm focused on small entrepreneurs now because I want to have a big reach to small entrepreneurs. And I was like, man, if more business owners, entrepreneurs, digital nomads, creators, anybody who thinks entrepreneurially could have access to some of these tools, tricks, tips, techniques, oh my gosh, their lives would be so much better. And I believe everyone's on this planet for a reason. And I believe if you can live into that purpose, and I believe God's given each one of us a unique design and a unique perspective, and it's absolutely awesome. And if you're entrepreneurially minded and you want to have your own endeavor and business and fund yourself that way, I want to help you build a great company so that you can just spread goodness throughout the world. And well, I think one of the inspiring things about GCPIT is that it started out a passion, and it beautifully, look at where it is right now, and it beautifully illustrates what I'm talking about. So I'd love to connect with any of you guys on our website, livetrulyfree.com, or you can even comment and message through the YouTube channel, Live Truly Free. We're continuing to add better and better videos. But thank you so much for having me. It's been a pleasure. And in the meantime, till we talk again, may each of you and every one of you live truly free. Thank you.
Thank you so much, Mr. George Black, for that powerful session on strategies for blended finance and impact management. Thank you for sharing the story of Rackspace and explaining to us in such a simple way with such a difficult concept. Thank you for joining us today. And
you're welcome.
Yeah, pleasure to have you with us. Looking forward to working with you in the future as well. And with that, we have come to the end of our first session. Now let's move on to the next set of powerful speakers. We have with us David A. Jones, attorney and founder, DJ Law, United States, with a session exploring the role of impact in non-impact specific strategies. Mr. David A. Jones started his firm in 2016 after more than 25 years in some of America's most prestigious law firms. David's mission for the firm is centered on impact, making the law accessible and providing value. DJ Law supports this mission by helping the community through free legal clinics to underserved communities in collaboration with 80/20 Foundation and GAAIVCN through serving on nonprofit boards and through volunteering mentorship to programs that encourage entrepreneurship. Let me proudly invite Mr. David A. Jones to speak about exploring the role of impact in non-impact specific strategies.
Yeah, good morning, everybody. As I was thinking yesterday about this topic, I thought that maybe another way to sort of reframe the title was to use the one that you can see on the screen there, which is why impact matters to every company, no matter its strategy. And I come to this issue from a variety of different vantage points. And I think my presentation is going to be perhaps a little bit more micro in its perspective than George's prior presentation at a very macro level. And so the way I come to that perspective is through a few different things. In my firm, I represent a wide range of companies, everything from people who are starting restaurants to people who are starting tech companies that they hope to go public, to nonprofits that are doing simple things like encouraging people in minority communities to register to vote, people who are providing support and services to victims of domestic abuse. I mean, a really, really broad range of people. And so I see motivations in terms of who's starting businesses that cover the gamut from I want to get rich to I want to do good. And there's a broader overlap in those two things than you might think. In my service on nonprofit boards, I am finding over and over again that obviously people are motivated in some sense by a desire to be impactful by being on a board. That being said, one of the things we're going to talk about in a little bit is the fact that when people think of for-profit businesses and they think of nonprofit businesses, many times in the past, people have thought about those two things as completely separate from one another in terms of how they operate, how they have to be motivated, and how they have to have a perspective towards money. And to a degree, that's true from a legal standpoint. But from a practical standpoint, a nonprofit is just the same as another business. You got to have money or you can't do the things you want to do. I also come at this from the perspective of someone who is an angel investor. And by that, for those of you who don't know, that means that when companies are in their very early stages and they are looking to find people who are maybe friendly investors, who can provide the little bits of cash that they need to get started and go from, maybe not all the way from point A to point B, but from point A to point A3 or A4 or A5 on the way to that. And as I see pitch decks and hear presentations, I am noticing more and more and more that there is a focus on impact in almost every presentation that I'm seeing. I'll give you one example that struck me recently as a really unlikely one. When people think of clean, forward-looking industries, they do not often think of the field of oil and gas. I have been getting pitched to consider investing in a handful of companies that have technology innovations in those industries, all of which are designed to reduce the environmental harm that those industries cause. Now, those inventions also happen to produce for those companies profits, either because they keep pipelines operating more cleanly, more efficiently, more effectively, with less spillage, less waste, or they offer ways to recapture gas or other byproducts of the production of energy that otherwise would simply be dumped into the environment. And again, whether those inventions are motivated by impact or not, impact is at the centerpiece of what those things are doing. I also serve, along with George and LJ and Shantana, as a group of people who provide mentorship through a program at Trinity University here in San Antonio to college students and alumni who want to start new businesses. And one of the things that has struck me in talking with the people who are motivated to do the things that they are doing is that at some level, and again, it's across almost every industry, impact is at the centerpiece of what is driving the people who are starting these companies. Again, I'll give you an example. One of the student teams that I'm working on is a fashion company. And you would not normally think of someone who wants to make really cool handbags and blue jeans and other things for women is a company that is on the cutting edge of having a positive social impact. But in fact, the entire reason for that company existing is to take textile waste that's resulted either from the manufacture of other products and there's just leftover fabric and so it would go to a landfill, or taking used products and remaking them, or in the vocabulary of the fashion industry, upscaling them or revamping them into new products. And so while that is absolutely a company that is motivated to make money, there is an impact at the heart of all of it. And the common theme, as I've hinted at before, of every kind of business is that they all need money to grow. Now, here are some of the themes that I'm seeing. Impact and profits are not in tension in the way with each other, in the way that some people think that they are. Because traditionally, people would think if I'm starting a for-profit business, well, my goal is to generate revenue. And if I'm starting a nonprofit business, well, then I am living a life that is turning on my ability to generate grants and donations. And I think the world is realizing more and more from both sides of that perspective that those perspectives are not as cleanly separate as I think a lot of people thought that they were. Now, because on the for-profit business, you can look at a company, whether it's a private company or a public company, and have social impact specifically be a part of the company's mission. Now, it's easier if you're a private company because you don't have shareholders who have the potential to sue you for failing to maximize shareholder value. And if you are a nonprofit, many now are realizing that if they can find a way to have a sustainable form of consistent revenue generating sales of products or services, that allows them to operate and to achieve their mission in a way that is different from the traditional perspective that the people who run a nonprofit are on a nonstop trail of pursuing grants and donations. One of my favorite examples to use in explaining this to people is that when you think of the Girl Scouts, what is the first thing that people think of? 99 times out of 100, people think of cookies, which the Girl Scouts sell. And yes, Girl Scouts sell hundreds of millions of dollars of cookies. The Girl Scouts are also a nonprofit. And why is that? It's because the cookies that are sold in front of supermarkets and drugstores by, little cute girls wearing their Girl Scout uniforms, usually with their moms who are trying to see if they can outdo the next door neighbor and sell more cookies than the person across the street. That money is put back into the mission of the Girl Scouts, which is empowering and growing strong young women. And that's the mission of the Girl Scouts. And you can sell products as long as you use the revenue from that to generate offerings to the members of the community that the nonprofit serves that is consistent with the mission. I'm also seeing more and more companies that are choosing to create a couple of separate businesses. They'll be on the one side, you'll set up a for-profit company, either a corporation or a limited liability company. And on the other side, you'll have a nonprofit. And the nonprofit corporation can do business with the for-profit companies. Now, as with everything that has to do with taxes and law, there are a lot of rules and specifics, and it depends associated with whether specific things are permitted or not permitted. And so I have to encourage anyone who's listening to this to consult with your accounting people, consult with your tax people, consult with your lawyers before you jump too hard into having a nonprofit that you run do a lot of business with a for-profit that you also run, because there are rules you have to follow to make sure that you don't put at risk the tax exempt status of the nonprofit in doing that. But that is something that people are doing a lot of. Here, I'll give you one example. I'm currently working on a project in which we are turning a community space that is going to be focused in some parts of the day on providing meeting space for groups of women who are survivors of domestic violence. Other times, it is going to host nonprofit theater events. Other times, we are looking at putting a bar and a restaurant into that space that will also be a showcase for nonprofits' art projects. And this is simply a way of trying to find a lot of different things that we can put together that are going to not put at jeopardy the nonprofit status of the nonprofit that's at the heart of it, but also create sustainable, repeatable forms of revenue through for-profit companies that are operating in the same space or in collaboration with the nonprofit. In these areas, as I'm talking about the different places that I look at the clients that I work with, and why does impact matter no matter what the business is that you are running? Focusing on diversity, focusing on equity, focusing on inclusion is not simply a popular buzzword for people who view themselves as progressive, or if you're less interested in DEI, perhaps your perspective is that these people are woke. It is a valuable and important part of every business, and there are very practical reasons for it. Number one is the best talent in the marketplace demands it. If your company is not one that promotes, that encourages, that fosters the broadest range of people to giving them opportunities to work on the best projects, to have the highest promotion opportunities, to have their voices meaningfully heard, that gets out into the world and that impacts your recruitment, not just among minority candidates or women candidates, but it affects it among a lot of candidates. You know, when I talk about being part of mentoring with college students, it just to a person, it is something that the whitest white guys are, you know, they are focused on finding companies that value diversity, equity, and inclusion, because they know that those companies have the best long-term performance. There are countless studies. You can look in places like the Harvard Business Review. They have study after study on the fact that diverse founding teams, diverse companies are better. There's a wonderful podcast that Brene Brown did a little while ago with two people who from MIT about the Great Resignation. and explaining how can we quantify and study which people chose to leave their jobs during the pandemic. And the number one answer was people quit their jobs and did something else during the pandemic because of the toxic work culture that they were in. And what were the things that made a company culture toxic? Number one was a lack of equal opportunity for people who present from different groups. The best clients also require a focus on DEI in who they hire. I know that when the law firms that I've been in before I started my own, we often had to provide in answering requests for proposal or in submitting proposals to work on projects for big public companies. They asked us to demonstrate, not just by who we brought to a pitch meeting, but from top to bottom, how did our firm walk the walk on issues relating to diversity, equity, and inclusion? And did that have an impact on the firm doing things that it wouldn't otherwise have done in terms of promotion, in terms of encouragement, in terms of making it a more progressive workplace? I'm not sure how much was a push and how much was a pull because of the leadership of that firm. But either way, the fact that we knew that outside clients were going to judge us based on not just can we put a diverse looking team together for a set of pitch materials, but are we going to have a diverse team actually working on their projects? That mattered in the way that the firm ran itself, and it mattered in the way that we presented to the outside world. Lastly, how's all this happening? I think, you know, I've sort of had on the point there about breaking with traditional thinking. I think that's kind of the recurring theme of all of this, right? Is that one aspect of the pandemic for all of us has been that we're taking a pause and looking both inwardly, personally, you know, with our families, with our friends, with you know, in ourselves about what matters. And I think that is something that is also happening in the way that all of us look at the businesses that we choose to associate with, the ones we work with as, you know, as the ones we work in, the clients that we choose to work with. Speaking for myself, I'm definitely more choosy about who I work with than I think I was 5 or 10 years ago. This system has been set up to make it possible for for-profit companies to specifically center their mission on things like having community impact. A B Corp is a legal creature that exists in many states, and it's called a benefit corporation. And essentially, a benefit corporation is one that is, by its nature, legally and by virtue of the way it communicates with its audience, it tells the world, yes, we are here to make money, but we formed ourselves a certain way because we are making a commitment that we will have, as a part of our mission, we are going to take profits that otherwise could go into the pockets of shareholders, and we are going to take that money and use it for public interest purposes. So a couple examples. Everybody knows the example of Tom's Shoes, right? Tom's Shoes is, you buy a pair of their shoes, they donate a pair to a community in need, you know, often in Africa, but in all places around the world. Ben and Jerry's, they sell tons and tons of ice cream and they make lots and lots of profits, but they also use a lot of those profits to invest in environmental causes, and whether that is making donations to other environmental nonprofits or purchasing land that they want to preserve, they do all of that thing. And they do that because they are a B Corp. And I think overall, we're seeing, at least I'm seeing in my little micro world of startups and technologies and nonprofits, that innovation in almost every form has an element of impact in it. And so I think when I saw the topic of explaining the role of impact in non-impact specific strategies, I thought to myself, well, that's a really interesting title. And as I have thought about how to speak on it, I guess I kind of came to this conclusion, and I'll leave everybody with this, that if you have a strategy for your business that doesn't include some element of impact, you should really be rethinking why that is. Because I bet you are leaving something on the table that could turn your business into a better one. And so I'll leave you with that. Anybody wants to reach out to me, you're welcome to. My email is david@djlawpartners.com. And I've enjoyed this. Thanks very much.
Thank you so much, Mr. David A. Jones, for that very powerful session. As you mentioned, impact should matter to every company. Thanks for sharing the stories of impact, and they all show how any company can focus on creating a social impact. Thank you so much for inspiring us to think about what really matters. Thank you.
You're welcome. Thank you.
Thank you so much. Next, we have a session by Krishnakant Jha on unlocking impact in developing economies. Mr. Krishnakant Jha is the CEO of Biomass India and has over 30 years of work experience across various sectors, which include sustainable agriculture and farmer development. He worked in projects which aimed at economic growth, poverty alleviation, partnerships development, business plan development, and advisory services. He has vast experience in ecosystem development, procurement, and process assistance, standardization, and policy advisory for entrepreneurs. His experience also includes handling investors, innovators, NGOs, scientists, policymakers, and farming community and various government entities. He has supported uplifting the livelihood of more than 100,000 farmers through new income opportunities and ecological farming methods and resources that are mindful of our fragile ecosystem. He has held various leadership roles in management consulting and government administration and has worked with the Government of India in the formulation and implementation of several government programs aimed at poverty alleviation and employment generation. Let me invite Mr. Krishnakant Jha for his session, Unlocking Impact in Developing Economies. Krishnakant, are you there?
Yeah. Am
Yes.
I audible?
Yes, perfectly audible now.
Thank you, Aparna ji. And namaskar from India. Good evening from India, everybody, all participants. I think, yeah. So as all of us are aware, how COVID has impacted the world economy. A huge human cost, tragic human loss of life, severe economic impacts, and the major threat of global depression. Now, global growth estimated to be 2.9%, which was 5.7% in 2021. And in January this year, the projection by World Bank was 4.4%. And after this Ukraine war, it has come down to 2.9%. The growth has come down. And next 5 years, the crisis would cost $28 trillion in output losses. Economic impacts are particularly severe in developing economies, and the increase in extreme poverty, it is projected by 198 million is going to be added to the extreme poverty. Such is the situation. The debt stress is severe. Global public debt is projected to reach a record high level of 100% GDP. And developing economies will be hit hardest. There's a danger of mass unemployment around the world. Children out of school, potential undermining of the social fabric. Now, besides this COVID crisis, we have a more severe danger of climate change. Because we know there is vaccine has been developed for COVID, but no vaccine for climate change. Therefore, we have to take it very seriously, especially in the Western Europe, what is happening now, the temperature has gone up. So London is at 40 degrees centigrade now. And in other countries also, Western Europe, it is very severe, hot conditions. Now we require investment for everything, for health, education, growth, social cohesion, climate change. But investment requires sound policy. What should the policy on which investment should be made? There's a huge potential for investment because in most of the countries, there is negative or zero real interest rate for many countries. So there is a huge saving. But unfortunately, there is no link between saving and investment. That is not happening. Now, what is the need now? So this enhanced inequality, which has been further increased due to COVID and rapidly rising food and energy prices, need immediate attention. Structural damage to economies cannot be solved by traditional approach, only profit. The traditional approach was only profit focused. Job losses and other hardships concentrated among the poor, youth, and women. Extreme poverty could rise to 860 million this year, which was earlier 650 million. So it has increased from 650 to 860. That is the projection by Oxfam. Social economy can offer innovative bottom-up solutions to many of the global challenges, including climate change. So there is the only solution is social economy. Because social economy works with local communities and has huge job creating potential. So how to unlock the social economy? Question is how to unlock it. In times of multiple challenges, social economy organizations have saved the communities and helped manage major transitions. In 2008 financial crisis, employment in the social economy grew by 20%, whereas there was a job losses in private and public sectors. In the European Union alone, there are 2.8 million social economy organizations, employing 13.6 million people, representing up to 9.9% employment in some countries. So social economy is absorbing a lot of people. Social economy supports disadvantaged groups, drives sustainable development, and offers an alternative to our current economic model. Now, social economy has been already recognized to address global challenges. European Commission has launched its social economy action plan. ILO has started discussion. OECD is making legal recommendation for its inclusion. But what are the barriers of social economy? There are lack of supportive legal and regulatory frameworks, inadequate supply of financial resources. And the major thing is restricted access to markets. World Economic Forum gives 5 policy recommendations to advance the social economy. What are the 5 recommendations? The first one is recognize and build new frameworks. So political recognition, development of regulatory environment, and dialogue with the social economy actors. The Republic of Korea already has placed Social Enterprise Promotion Act to incentivize social enterprises. This is one example that Korea has already done. European Commission has launched its Social Economy Action Plan, where the investment is over 2.5 billion euro to enhance social investment. Second one is create incentives for funding and investment. Because social economy, we require funding also. Support by investing public fund and encourage investment by mainstream finance providers. Fiscal incentives, elevating regulatory barriers is required. Singapore has set up one example, Singapore Center for Social Enterprise, to offer grants to social enterprises. Third one is expand education and research. Enhancing research and education on social economy in schools and universities can develop the local knowledge and also support the talent pipeline for the social economy. Scotland has launched the Social Enterprise in Education program to increase the understanding and promote awareness. Make public and private investment. Encourage public sector to buy goods services from enterprises that support social economy. Hence, procurement becomes a vehicle to support integration of people from excluded groups. Provide incentives for the private sector to procure from the social economy. European Union member states adopted the EU public procurement rules, which is allowing for environmental and social considerations when awarding public contracts. EU is already doing. Other developing economies has to follow it. And the fifth one is collect and make visible social impact data. We have to measure the impact also to make it more visible and can be replicated. To increase the visibility of this sector, collection of statistics on economies go beyond traditional indicators is required. Besides the contribution to economic growth and job creation, overall impact of the economy should be measured. The Social Progress Index measures the extent to which social needs of citizens are fulfilled. So that is in the same direction. Social progress index we have to implement. And now for social economy requires impact investing. So Global Impact Invest Network has tracked 209 respondents and with some $114 billion in impact investing. They have invested 21.1 billion into nearly 8,000 impact investment and plan to increase to $25.9 billion. That means they're increasing the investment. That means they're satisfied with the results. They have reported the investments have either met or exceeded their expectations for both impact, 98% they have satisfied, and financial performance, 91%. They have measured social and environmental performance using a mix of approaches, including the Sustainable Development Goals. They believe that large-scale financial firms should professionalize the impact investing market and bring much-needed capital. So there is a big hope by this group, the global impact investors. Now let us see what is how this works. This impact investment is impact thesis building inclusive communities plus impact investment thesis. So you have the benefit of both, that is for profit and non-profit, which was recently David Jones had mentioned in his talk. So for profit you have repayment, revenue saving, and for non-profit you have inclusive communities. So here you get benefit of both worlds, and that is called to impact investment. Impact investment increase resources because you are getting back the money, unlike grant where you are not getting back the money. So therefore, impact investing increases the resources while altering capital markets to favor equitable, healthy, and environmental sustainable growth. Here you are giving example to capital market to focus on environmentally sustainable growth and see the opportunity. The global capital market is $212 trillion. And out of that, US Foundation impact investing is only 10.6 billion. It's a small pie. So we have huge scope. So hope is there. We are optimists. And let us see one example. I'm just giving one example of Biomass India, which I belong to. So this is Biomass India. Here we are focusing on adding value to the waste, agri-waste. So here we are thinking of upcycling the biomass.
I have a question, teacher. I have a question.
Let me complete. Sava.
Yeah. Oh, wait. Sorry.
No issue. So it aims to utilize 25 to 50% agri-waste, otherwise burned in India, creating waste to value ecosystem. Now, impact area is increasing farmers' income and sustainable production, and besides that, we are getting the benefit of climate positive farming, right? And it will support to disrupt conventional industries such as packaging and furniture by introducing competitive and 100% circular alternatives, develop green supply chain, and become climate neutral or climate positive, meet the growing demand for sustainable products and natural raw materials. It also contributes to the UN Sustainable Development Goals like no poverty, good health, sustainable cities, climate action, life on land, and partnership for the goals. How it works. So this is how it works. We are going to establish processing hubs all over India, and that will work for this, sustainable paper, renewable energy from agri-waste, packaging material, pulping, panels, and this will be linked to the market, and this will give you products at par with the traditional business. And this is the goal we are planning. We are planning to impact 1 million farmers with 50 processing hubs and 11 million tons of CO2 we can prevent in the atmosphere. And with the public-private support, definitely. This is the goal for 2030. So let us join Biomass India to invest in a sustainable future. Thank you. Now you can ask question. Yeah.
No, we are not taking questions here since we are a little late. Thank you so much, Mr. Krishnakant Jha, for that very informative session on economies.
Yeah.
Sorry for that. I think there are some There's some disturbance. I request tech team to please remove it. And then thank you for joining us today. And next we have a session, Unlocking Impact in Developing Economies by Dr. Sindhu Bhaskar. Dr. Sindhu Bhaskar is the chairman and CEO of EST Global Incorporated, which is an enterprise based in the Boston, Cambridge, MIT ecosystem, Cambridge Innovation Center, Cambridge, USA. EST Global Incorporated is an impact platform, and so it does not have a pure business or profit-centric model philosophy. Dr. Sindhu has worked his career to global leadership in transforming the financial ecosystem through digital evolution, fintech revolution, and financial inclusion. With 3 decades of niche experience, Dr. Sindhu is a firm believer in innovation-driven entrepreneurship. EST Group is firmly set towards the goal of borderless banking, a banking ecosystem that transcends the boundaries of currency exchange and roadblocks like identity verification and re-verification. Successfully pacing in his professional journey, Dr. Sindhu Bhaskar continues to work hard with the mantra, there is no shortcut to success. Over to you, Dr. Sindhu Bhaskar, for your session, Unlocking Impact in Developing Economies.
Thank you very much, Aparna. Hope I'm audible to everyone. And everyone
Yes.
can view me, see me also.
Yes, I can see you.
So, thank you for the warm introduction. My platform, EST Group, has 4 verticals, and all the 4 verticals are into impact. So I have first the banking, wherein I have neo banking. Second is agri-tech. Third is health tech, and 4th is ed tech. So I'm into all these, and all are now operational and working. We have been working very hard to make them operational because we know that these are the different genres of activities which are going to really impact the society and population, and we can very effectively measure those impact, because just talking about impact is different thing, and creating the quantity and measuring the quantity of that impact so that we can share the model with others and try to go to other areas and replicate the same model. That is the most important agenda for us. So,
sorry for interrupting. If you could put in slideshow mode, it would be better.
Yeah, it's in slideshow mode.
We are.
It's okay?
No, not. Yeah, perfect.
Okay. So the world seems to be on fire right now. So our efforts also trying to douse them with more impactful visions, innovations, and practices. SDG principles have become the goal-setting standards, and ESG guidelines become the road to the pious hope and aspiration. So there is urgency to save our planet and earn more carbon credits. Impacts are the consequences of our, say, planned, deliberate efforts or results just out of blues, totally unintended and unplanned. So I would like to say that every action has a reaction. So after assessment and quantification, we can determine its nature, good or bad. Therefore, it is difficult to create a nut bolt tightening situation to create impact. So we have to really slog with it and know the area, know the people, know the society wherein we are working, and then try to create the model. Because if we see 13% of the global population is below the international poverty line, and many more are living just on a few dollars every day. So it is very important that we have to realize that capitalism as a tool for savings has not taken roots in rural economy. No doubt the current income and wealth distribution has been brought about by interventionism capitalism, socialism, rather than pure capitalism in the multifaceted, multi-tier developing economies. So we have to move to creation of assets, creation of capital to create the real impact, because in developing societies and developing economies, there are so many factors which need our impactful say action, and that is what we should look at. Of course, infrastructure is one. Then I think the biggest problem is of agriculture and food. So that is what we have to elaborate on all those things and then try to see where we are and how much impact we are trying to create with our vision and with our actions. But as we talk of inclusion and all, like inclusion without any knowledge inclusion, I think it is very difficult to create that awareness in the area and people among which we have to work. So with my EdTech, I'm trying to create that knowledge percolation and digital empowerment in the tier 3, 4, 5 centers, so that it can lead to financial inclusion and people can understand the dynamics of economics, and they will understand the realities of digital assets and the need to have all those acts to create the basic individual capitalism, which can further result into stakeholder capitalism, because that is the real mantra wherein we can see the growth and we can measure it also in real terms. The basic problem is that in developing economies, governments have their own agenda, own political agenda, so they don't have a long-term vision. They just stick to their short-term political agenda. And that's why there is a mismatch between even the public sector, private sector. They are not able to contribute, and even they are groping in the darkness that which way they have to move and what they have to do. So these are some very genuine problems that we see in the developing economies. Now, when we try to see in these developing economies, which way our impact should move, but when we see the spatial and temporal processes and the environment in which the reforms and the activities are happening, we don't have any control in developing economies. Some are intended really, like in India, there has been a massive expansion of digital economy to the remote areas as well. That had the intended vision, and the result was there is now a big digital inclusion, which other developing economies are still to get. Even developed economies are still to have those type of financial inclusion created by UPI model in India, which is mind-boggling. All the banks, all financial activities are connected to one API. Whereas mostly we see that in developing economies, there are unintended developments. And if you see unintended developments, that means it is the political agenda of the government which is riding roughshod and creating all this problem. So there is no government connect, so there is no public awareness, and it forks out in multi-direction. So its result can be positive as well as negative, because you don't have control over the flow of the actions. It can move out in any way. Whereas if you see intended, it has unidirection. It moves towards the goal and the agenda for which they have been initiated, and results are positive, but it has a different variation. Targets may be met or targets are underachieved. They have not been fully achieved. So this is how these things move. Now, the question is, how can the impact of sustainability and other initiatives be unlocked or scaled or amplified in developing economies to achieve transformative changes? In other words, how our good friend Genie can help us if we are trying to take help. Let the figure open, then you will see what model I'm trying to talk of. The very topic of our discussion suggests that the mission to create and scale social impact could not make a significant headway. In hindsight, it is correct also, because when you see different companies. I would like to present a humble saga of integrated fintech rural development, and that is called GAAIVCN. That is the agri-tech platform. I'll take you to a small journey where the metrics is the tier 3, 4, 5 centers. Fintech and AgTech are the agents. I don't know why this is moving away. Let me fix it. Let me take you to a small journey where the matrix is the tier 3, 4, 5 centers. Fintech and AgTech are the agents. Blockchain, DLT, AI, machine learning, drones, and robotics are the tools. We married technologies to banking and finance and rural areas to create the foundation for an integrated development. Already a neobank by the name of BranchX, which is catering to migrant communities, is working in India from our side. Recently, we have launched this AgTech, and as a pilot project, 250 farmers have been enrolled, and we are working in the tribal area of Jharkhand. And we are trying to, can I just close this and restart my presentation? I think
Yes,
there's
sir.
something wrong here. Okay. So we analyze the basic problems, the traditional ones as well as the new ones, being the technical illiteracy and non-proliferation of benefits. The Technofin assessment summary suggested that the real problem has been the non-creation of durable and sustainable capital and asset. Most of the rural economies are based on financial doles in form of grants, subsidies, and government cash schemes. What happens thereafter, whenever this cash is consumed and like the clock arms, they come back to the center. This is too disturbing. I think if I keep it like this, is it okay?
Yeah, it's okay.
So the strategy that we unfolded was to create this comprehensive integrated digital platform. Several startups were brought to EST ecosystem, wherein we put in seed capital as well, so that it should not be just development of the platform, but it should be a very incisive development and development of different startups coming together for a very specific purpose. BranchX, the first theme-based neobank, has agency agreement with ICICI and RBL and Yes Bank in India, and it was launched there, and it is working very well. In 1 year, we have nearly 1.5 million customer base and $360 million worth of transaction. And it has a phygital model. So we have 18,000 agents. That's how we are working, going to the remotest possible area and making all the financial services available to them. And we call our agents like human ATM. So if there is any need for any money, they can just make a call, and the central to whichever agent is at the nearest point from the caller or the subscriber, they go and make the funds available or collect. Different kirana stores or corner shops, as we call them in India, kirana stores, they are the POS for us. Fully armed with this and the agent network, we now penetrate deeper in the countryside to move to the final frontier of commodification of agriculture and corporatization of the rural economy. EST AgriX is a cutting DApp, the decentralized autonomous platform, to corporatize rural areas with the creation of new wealth. It is a blockchain-based agriculture platform which spans 3 cycles of farmers: as producer, as seller, and as wealth creator. We believe we can help beat the social pyramid, become a social diamond structure with real-term growth. So if you see the next slide, these are the 4 pillars we are utilizing as 4-pronged strategy. The 4-pronged strategy consists of these 4 stages of economic rebuilding activities, consisting of capital aggregation. Large number of cooperative banks and rural banks are being brought together, creating interconnections to act as a super lender. Capital utilization, it is basically the lending platform. The combined capital of the cooperatives and rural banks mix becomes the lender to the rural industries. Capital replenishment or rural exchange. This is a very new concept that we have tried to develop. The rural loan portfolio is converted to a long-term, say, 5-year digital asset like e-receipts, bonds, tokens, available through the rural exchanges to HNIs and other investors. This liquidates bank loans, improving their financial stability, while borrowers get a long-term debt with lower interest rate. So the farmers do not have to lose hope and they have to get frustrated and commit suicide, because you have long-term loan facility. So if there is failure of crop, don't lose hope. Next year it will be a better crop, then you can repay your loan. But whatever government subsidies, insurance claims, other things come, 50% goes towards the repayment pool, 50% goes towards the reactivation of the agriculture process. The app and wallet for e-Rural Invest is ready with various investment products like commodity and mineral derivatives as well. Of course, these are not new things because there are so many rural schemes, investment schemes, rural bonds available in India. So we are just trying to create a focused market for them so that investors can come there and they can safely invest with a real vision that whatever investment they are making, it is going to create a massive impact in the rural economy. Already the Securities Exchange in India has started talking about local exchanges, and we are waiting for our permissions. We took over equity in a SEBI registered broker dealer so that we do not have any clash with the regulatory system. So we are very much there following all the rules and regulations. We also created the marketplace. 4 levels of market are integrated: P2P, local market, national market, and international market. Another unique market is EST, cashless rural market. The export of goods creates the forex earning for the tiny industrial units. This makes their equities eligible to be traded on rural exchange. So the whole canvas will look like this, the whole ecosystem. So you have the banking here. We are coming out with another neobank for farmers, MSMEs, students, and women. So BranchX and Neo both combined together. We are imparting them like digital knowledge and education through our EST Fab, which is called FinTech and Blockchain Association. And these are the different services which we are providing to them. And all these tiny industries, rural industries, I have personally created the connect with overseas buyers so that they can earn Forex. And once they are earning Forex, their equities become eligible to be traded on this rural exchange. And this is how the capital that they have created with value-added facilities in the agri-tech, that capital is being rotated and made like empowered so that they can create further capital. So capital is in a way attracting more capital. And our tech guru and solution is AIDIA, as we call it, the Artificial Intelligence for Decentralized Investment Application. And the Real Brain is based on blockchain, supply chain management, settlement system, food chain management, inventory management, fully AI-backed processing and data center for us. As a matter of fact, we have our own payment gateway, EasyPay in Ghana, and now with the Central Bank of Mauritius license, we have got a global payment wallet, and we can operate in 120 countries. We have already activated 70 countries. Another 50 countries are in the offing. So that's how we are trying to connect and create the whole massive ecosystem, because if we are just going to look at one aspect, we cannot take care of the SDG vision or ESG guidelines, and we cannot have the real impact for a long term. Of course, short term, you can always create, even there are cases of fudging of data and facts and figures to create that, yes, it is a green in industry or impact industry, all those things, but we are not there. We are trying to be very, very cohesive in our approach and in our working, so that we have real impact, and which can it can grow through time, and it can create real meaningful difference to people in those tiers. With this commodification of agriculture and corporatization of rural economy, a capitalist rural economy develops, which is the result of the participative capitalism. When all this, because they are all you can see the picture here, they are all interacting and integrated to each other. So everyone is contributing. So when we talk of like World Economic Forum and all, when they talk of stakeholder capitalism, that is the net result of participative capitalism. Unless you are participating in creation of a capital, you cannot create stakeholder capitalism. When these areas work as units and clusters of rural economy, integrated to and interacting with each other, the rural capitalism gets established independently, and the country can grow with mutually contributing rural and urban economies. So the magical transformation here, rural economy magically emerges as a true additive partner to the urban industrial economy, with the commodification of agriculture and commercialization of rural economy. As testimonials, we have adopted a real fiscal model with agents, which also generates employment opportunities. So we are doing all those things, but from where those agents are coming? Agents are from those local areas. So whosoever is educated, we are employing them so that we can tackle the issue of unemployment in these emerging economies as well. Here is the main crux. When it is a participative capitalist economy with the logic of creation of wealth, then the concept of circular economy, ESG, and others so piously repeated by our international development agencies will see the real success. Real success has eluded us only because everything is from top with trickle-down theory, which has become a misnomer and redundant now. It has to be a reform from below with no economic dole system, or even to say that amplification can come through any pro bono system is not realistic, as it does not create the respect and trust towards the logic of wealth creation. Thank you very much. Hope you like the presentation. And that's it.
Thank you so much, Dr. Sindhu Bhaskar, for the very informative session on unlocking impact in developing economies. Thank you for joining us today and inspiring us with your session. Now, we have with us, thank you so much. Since we are running late, let me rush to the next speaker. Now we have with us Mr. Russell Dalglish, co-founder of Scottish Business Network, Scotland, with a session, The Power of Global Networks for Impact Investment. Mr. Russell is a serial Scottish entrepreneur and investor, strategist, and innovator. Mr. Russell has enjoyed the benefits of a highly successful international career in the technology sector and now focuses his efforts on supporting owners and boards of companies to devise and implement growth strategies to create shareholder value. In his earlier career, he has held board leadership positions with international companies, achieving turnover more than £200 million. Core areas of focus are leadership, innovation, entrepreneurship, and strategic thinking. Russell is a founding managing partner of the advisory group Exalta Capital Partners and founding chairman, Scottish Business Network, the global network supporting Scottish business leaders. Over to you, Mr. Russell, for your session, The Power of Global Networks for Impact Investment.
Thank you very much. Can you hear me okay?
Yes, perfectly.
Oh, that's a relief. Well, thank you very much for giving me the opportunity, and congratulations to everyone on the conference. The quality of speakers has been exceptional. I'm here to talk just for a few minutes about how we take impact and we make it global. If we wish to be as successful as we would like in our ventures, it's critically important that we gather together a community around us who will work with us to amplify our message, help when it comes to investment, and also help when it comes to selling the products and services we create. So I've laid out here a simple 5-step program, which we followed when we built out our diaspora-based community, Scottish Business Network. So that community today comprises about 10,000 individuals across 73 countries. Now, these individuals have all agreed that they support our vision. And this is the first step that I would ask everyone to do on your projects, is to clarify the vision of how you wish to see the world to be transformed when you are successful. So our vision was very simple, which was to bring together all of the people with an interest in Scotland around the world. And we had one restriction, which was we had no money. So we had to do it all based on a volunteer network. Now, to motivate volunteers, and some of these volunteers work in investment firms as well as in large companies, again, they have to agree with your vision. They have to want to help you to be successful. So number one is about that vision. Number two, for me, is about the brand. And it can sound wrong to talk about a brand when we're talking about impact investment, because we want to have this positive effect on the world. But actually, the brand is today critically important, because the brand is what individuals are going to engage with you around. So the imagery, the language, the concepts that come from your brand are absolutely essential. You want the people within your community to mark themselves with your brand. We went as far as creating small metal badges that people would wear to indicate the fact that they agreed with our vision and were part of our community. And what happens with this brand is it allows everyone to gather behind it. Everyone can engage in the same way. And once you have the brand, you can then start attracting your community. So you have to identify who should be part of your community, work out on an attraction strategy, and then mobilize and continually engage with that community. Now, I mentioned on the slide here, LinkedIn. So we found LinkedIn incredibly useful resource for reaching out and connecting with our community. So we created a branded page on LinkedIn. We made sure that everyone was engaging us, was using our brand. And then we started daily messaging. Every single day, we would push out a message on LinkedIn to encourage others to engage with our brand. We knew the dynamics of our target audience, so we knew what they wanted to hear and talk about, and that was the message we put out. And we used our LinkedIn profiles almost as a newspaper. So every day we would have a headline and every day we would have a story. Now, sometimes those stories would be to do with investment opportunities in Scotland, or they were to do with Scottish success around the world. Or sometimes they were simply fun stories that the community wanted to engage with. So for example, today, the world's strongest man who has taken over from Arnold Schwarzenegger is a Scot. So Tom Stoltman is a great story for our community because they love the idea that there's a man in a kilt who is out there representing Scotland. So that idea about mixing the stories between business, investment, and also cultural was very important to us. So you're building that network every single day. You're attracting these individuals to engage with you and to work with your brand. And you have to be clear and concise and consistent on your communication. This is a really important point. So if you're sending someone a LinkedIn message, for example, that's 1,000 words long, it won't work. You have to be really specific with what you're asking. So what we would do is we would send out LinkedIn messages that were no more than 3 sentences long. We have a tagline called creating meaningful connections. And in effect, that's the only thing we do. We support it through events and everything else. But what we do is we try to help individuals by connecting them to someone else. So if we look in the world of investment, if we have someone who has got an impact project, we will look to introduce them to investors around the world who have an interest in this subject. Now, if you think about it, when you engage with investors, it can be very difficult to get to the gatekeeper. However, if these investors are already part of your community, they're engaging with the brand and they're identifying with your vision, they'll take your call. It's a key reason for building your community. Now, when you've got a small core team who have developed the brand and the messaging, have built the community, they don't have the bandwidth to continually grow that community from 500 to 10,000 to 100,000. In order to do that, you need champions. So we appointed champions in different cities around the world. We gave the champions a job title of ambassador. So they are our ambassador in different cities around the world, be it Delhi, be it Houston, be it Sydney. And they are locally on the ground to amplify our message, to engage with people who are interested in our vision, and to just be their hands on the ground. And what happens is they then provide us with opportunities by telling us what's happening locally. So I would urge you, if you have a project at the moment, who are your champions? Who are the people around the world who will give up their time for free because they believe in what you're doing? And some of the presentations I've seen today, it's quite obvious we have fantastic impact projects, but get those champions behind you. And finally, it's about partnership. It's about taking your community and linking it with other communities. That then amplifies your message. Now, this isn't an easy thing to do because deep down, we're all very selfish. We all want our community to be a success. But what we need to do is to build alliances with other communities who believe in the same vision as we do. Now, we've done this quite interestingly with in the world of ESG. So this last year, we had COP26 in Glasgow. So this was the major gathering to discuss climate change. So what we did was we started up a small subgroup within Scottish Business Network to look at climate change. This group then started to grow, and we were able to deliver several events through that group at COP26. The success of that has now allowed us to create a new entity called Net Zero Nation, which is there not with our vision. Their vision is about climate change, but we can then partner and amplify our own messages to each other. We also identified particular sectors where there was partnership opportunities. So within the technology sector, it was possible for us to partner with organizations there where the organization itself maybe had a UK footprint. So our international footprint was able to partner with them, again, to amplify that message. But the one thing you must do is to be consistent. Every single day, you're pushing out more content, you're talking about your successes, and you're continually looking to engage with new people. It's the most satisfying thing you can do because you build such partnerships around the world. But it's also quite exhausting. And this is where the champions come in, because these champions can then help you to carry some of the burden. Your projects are critically important to the world, but you don't have to do it alone. I love the fact that this conference has the tagline "Together and Now," because that's exactly what it is. We have to action today, and we have to do it together. So it's been a pleasure to join you from Scotland. I'm here to help. If anyone watches this video and feels that there's something I've said that might assist them, simply drop me a note. The simplest way to do that is through LinkedIn, and you'll find LinkedIn under my name, Russell Dalglish. Reach out and let me see if we can help each other. Thank you very much.
Thank you so much, Mr. Russell, for that very interesting presentation on that very important topic, the power of global networks for impact investment. I'm sure our viewers will surely follow and implement the 5 points you mentioned. Thank you.
Thank you now.
Thank you so much. With that, we come to the end of session 2, and now let's move on to our session 3. We have our next set of powerful speakers joining us now on session 3. Global Impact Startups Presentation for Scaling Impact by Catherine Gunderson. Dr. Catherine Gunderson is the CEO and founder of Grant Bequest Limited, a property technology company based in Edinburgh, Scotland, using data analytics, conservation, and sustainability best practice to promote the global redevelopment of vacant buildings. Catherine believes that introducing data analytics and innovative technology to the heritage and construction sectors will help empower and mobilize our local communities to bring vacant, empty, and at-risk buildings finally back into use. She has a background in technology operations and executive change management, which allows her to see opportunities for streamlining and improving complex situations. She has extensive academic experience, having been awarded her doctorate in business administration from the University of Liverpool, in which she studied decision-making in real estate. Catherine recently went on to complete an MSc in architectural conservation from the University of Edinburgh with an emphasis on at-risk sites. Over to you, Catherine Gunderson, for your session, Global Impact Startups for Scaling Impact.
Perfect. Thank you for that. Can you see my slides and can you hear me?
Yes, perfectly.
All right. I quickly have to disclaimer that Russell and I, even though we both are in Scotland, we did not collaborate on my slides because I feel like I did all 5 without even intending to. So we're about to kind of, here's my answer to your 5, Russell. So in keeping in track of the time that we are running a little behind, I'm going to go quickly, as you can tell with my American accent. Not from Scotland, but Grant Bequest is a property technology company that I founded here in Scotland in February of 2020. And then COVID hit days later. So it's been a wild ride. But the goal that we're trying to address is the use of our empty buildings. So this isn't just a problem that is here in Scotland. This is a global systemic social issue. And we believe that by using the trends of impact and ESG investment, that we'll be able to funnel the money into the local communities that need it to get these projects moving. So let's get the next slide. There we go. So how we're going to do that, we are a data platform. So I jokingly call this my duck analogy, where on the front of the platform, we intend it to be as inclusive and simple for communities to engage with as possible. But under there's wildly pedaling feet of very intense AI modeling and predictive algorithms that we're going to be using to help educate people on what these buildings could be used for. What are the risks they need to keep in mind? Who owns the buildings? A lot of different things that we have to keep in mind when we're trying to get these empty and derelict sites back into use, with the ultimate goal of promoting the global redevelopment of our empty and derelict buildings, as opposed to what we do today, which is just wait for them to either be demolished or be set on fire. Here in Scotland is a very common, unfortunately, thing that happens to a lot of these sites, or they become sites for new construction and we lose a lot of our heritage and history through that. So what we're also trying to do is really focus on housing at this point. So a lot of these sites are perfect opportunities for social and affordable housing to try to address some of the homelessness and affordability crises that we're facing today. So our vision, Russell, getting that vision right out there. So the vision that we have at Grant Bequest is relatively simple on the front of it, is to make regenerated buildings and the reuse of our empty and derelict buildings common. And in all communities, whether they're affluent or rural or any community that there's out there that has a building that they want to see saved, and make demolitions the rare exception. So we think that the status quo is broken. We think that the way the model is working today is a linear approach to the way that we have our places being moving forward. And we think that it needs to become more circular. We need to see demolitions become less acceptable in our society. We need to see regenerative energy and regenerative ideas become the new normal. So as part of that, we are also a mission-led organization. So we were actually surprised to find out that we were the first prop tech B Corp here in Scotland. And we were almost even the first tech company to go through the B Corp process. There's only a handful of us now. So it's really exciting to see this concept of B Corp, which for those of you that haven't already kind of looked into it or haven't picked it up from the other sessions. So being a B Corp means that you go through a pretty rigorous certification of the ideals behind your business, and that you're going to not only generate profit and employment, but that you're also doing it with a social and an environmental focus. So for us, we're using the SDG goals as a guide, specifically 8, 11, and 12. So in diving in on that really briefly, the reason that we selected those 3 is unique to the problem that we're trying to solve. So when we look at our ecosystem that goes into the regenerative reuse of buildings, the work that comes out of these projects is something that I'm personally very excited about generating. So we call those people partners. So again, Russell, with your partner reference there. So we're all trying to find ways to generate more decent and high quality employment for people. And we see these projects, these opportunities for small businesses to have access to demand for their services. So think architects, think trades, think traditional skills that we're losing today at a rapid rate. So we look at SDG Goal 8 as the opportunity for these projects to help us accomplish that. And obviously 11, so we can't talk about reusing buildings in our urban and rural communities without thinking about a sustainable community and the future of those communities. So we really focus on the reuse of materials, the circular economy, and also using these sites as an opportunity for construction to test and deploy new circular concepts and materials and technologies. So we're very excited about these projects being an opportunity to demonstrate what construction really could become and start trying to reduce our reliance on concrete and steel. I was at a conference the other day and was told shockingly that if concrete was its own country, America would be the #1 carbon emitter, China would be #2, and concrete would be #3. So when we really start thinking about the scale of the problem that we have in our new construction and our demolition sectors, the SDG goal of 11 is really where we try to come in and say, let's think about our cities in a new way. Let's think about growing our cities in a more circular way. And then with 12, we're always definitely trying to think about that circular economy and reducing our intent of build new construction, demolish, build new construction, demolish. This is just an unsustainable way of approaching growing our places. Another statistic that always blows my mind also is when we talk about net zero and we talk about 2035, 2040, 2050, whatever construct you're working on, if we think about in those decades, we're a growing population. We're going to have over 2 billion more people on this planet by 2050, which is twice the size of China. Where are we going to house these people? How are we going to continue to grow economic and housing, but be able to maintain our population growth as well? So there's a lot of different things that we're working on, and that's another reason why we focused on doing the B Corp as part of one of the very first projects that we had as a team. Because as I mentioned quickly, we did start in 2020, so taking that on right at the front was really our way as a team to kind of show our intent and our mission-led goals. So when we think about our problem that we're trying to solve, we're not the first people to try and solve this problem, but we're coming at it from a completely new perspective. And so that we think about regenerative use of buildings in 3 core customer segments. So the first one, again, Russell, we call them our champions. So our champions include people that work in councils, people that are local community members. And these are just people that are frustrated with the status quo and want to see their buildings be saved. So that's another thing that we're really hoping to ignite in people is a more democratic and inclusive construction and placemaking process. Today here in the UK, what tends to happen is a lot of energy and a lot of work and a lot of money is spent on new construction development projects, but the communities get forgotten. They get brought in at the end of the planning to do objections. The process seems very negative, very conflictory. So we're trying to bring champions and members and councils and the community and the locals together at the beginning and get their thoughts and hear their voices and hear their histories and bring meaning to these projects. Then the other group we have is our partners. So again, like I mentioned, driving more economic growth through these small businesses, through these local businesses is really something that we're excited about being able to do. And then the third category, and another reason why I'm so excited to be here at this conference, is the idea of using impact investment to help fund the deficit that tends to happen with these types of projects. So one of the really exciting things that we're recently working on is partnerships with local councils and trying to innovate the finance necessary to get these projects moving. So when we think about social and affordable housing and the break that we're seeing, not just in the UK, but globally, in being able to provide the housing that we need, we have to innovate the finance better. And impact, or ESG, or catalytic capital, all the different terms, it all comes down to this idea of using our money not to just grow more money, but to use it to drive more impact. So we really see our projects as the opportunity for impact investors to have a pipeline of social and economic growth that they can see in targeted communities. So it's a really new way of looking at an established problem in our society and trying to bring these three groups together so that each of them can grow and address their own unique problems and help our communities be stronger. And we do that by using technology. So my background is actually not from architecture and conservation and real estate. My background is in operations. So when I started studying this problem, I was living in Detroit, Michigan at the time. And in Detroit, we had just gone through the largest bankruptcy in US history. So there was communities completely destroyed, not due to hurricanes or tornadoes or anything natural, but purely economics. Economics destroyed these communities and houses were vacant and derelict and on fire. And it was a very traumatic experience for this city. And so I started thinking about how can technology and operations solve what the market isn't able to. And so what we're doing at Grand Bequest is we're basing this idea on three main pillars. So that first pillar is around standardizing the workflow. What is the process here? What do you have to do to save a building? And so we spent the first full year of growing Grand Bequest really trying to simplify down to the core of what do people really need to know? Because right now this process is much too confusing. Today, if you want to save a building, it on average takes 10 years, especially if it's a protected or historically significant building. And that's just too long. We need to grow quicker. We need to innovate. We need to disrupt, because I don't know about any of you, but 10 years is a long time to try and do something. So the second pillar that we're breaking into this problem with is by packaging these buildings as impact investment projects. So it's a new way of looking at a building. It's a new way of looking at these empty and derelict buildings as not liabilities waiting to be demolished, but assets in this battle against housing crisis and against our climate change issues that we're trying to handle. And then the third thing that we do is we try to match make people in these projects. So again, bringing those three groups together with the data that they need on risks, on impact, on cost, on timeline, all the information that's really difficult for us as individuals to figure out, but is very easy for computers to figure out at scale. So with those three things, we believe that technology is going to be able to help us solve this problem. So one of the things that I really hope people can take away from this presentation, if anything, is thinking about technology as an opportunity to start solving some of our largest problems by innovating the way that we approach them. Technology has the ability now and is at such a lower cost now that we can really start using it for our social benefit, in addition to impact investing being able to fund those ideas. So I hope people start really getting excited about the pressure that we're feeling by that 2050 goal, but it really is hopefully it's the catalyst we all need to kind of start getting a little bit more aggressive, a little bit more creative. And so for us, just to give you just a little bit more information about how we think about that process, just in case you're trying to bring these concepts to your home and your home communities, it's just a 6-step process to us. You know, it's again, going back to my operations background, when we think about trying to get these buildings back into use, we came up with this core idea of the first thing we need to do is identify the buildings. So we're trying to make the word bequest a verb, an action of talking about an empty building as an opportunity. And that's where data can come in. That's where the technology platform that we're going to be deploying soon is showing a lot of the information about who owns it, what is the income in that area, a lot of information that we have available to just give people a good understanding of what's going on in that area. And the basics phase is all about identifying those risks, gathering the community feedback, bringing the community in at the very beginning of the project is again the way that we're kind of approaching this as a B Corp. And then the feasibility. So what should we use the building for? How should it be used? How is it going to pay for itself? Because obviously we don't want to take a lot of time and energy saving a building just to have it fall into a derelict and empty state again. And then we need to figure out how we're going to pay for it. So how much money is it going to take? Who's going to help us find that funding? And what does that capital stack look like? Again, this is where we really think that impact investment is going to help us unlock this systemic problem. And then there's the construction and conservation phase. So ironically, the way the business of real estate and development works today is that's the most important conversation to most of the people. But in my opinion, the first 4 phases are the key. The actual act of being on site and touching the materials and getting it going, that's what the real estate professionals do. That's what they do all day long. But we at Graham Bequest and the communities and the technology and the innovators in impact investment, we need to focus our energy on the beginning phases to unlock these communities and unlock these projects. And then the last step that I always want to make sure that people never forget is the celebration, the being able to be excited and bring people together and accept that it was hard. It was a hard journey to get there, but we all celebrated and we completed that project. Because today, a lot of these projects can tend to be very negative and very disappointing and very difficult to get through. But that doesn't mean that we shouldn't take a moment to celebrate and come back together and reinforce that sense of community. So for Graham Bequest, these are the 6 phases that we're bringing our projects through to try to help build momentum in these industries. So I think if you guys want to apply these kinds of concepts to simplify these global systemic problems down to its core big steps, it does make the problem feel a lot more manageable and a lot easier to understand how technology and innovation can help. So the last takeaways that I just want to leave you guys with is a quote that's it's becoming much more popular now that COP26, like Russell said, just went through. And this quote here in conservation and construction and heritage of the greenest building is actually the one that's already built is becoming much more of a mantra around this idea that embodied carbon and operational carbon and the way that our buildings behave and how they can become assets when we start really thinking about them in the right light. We need to stop losing those. We need to stop demolishing those, and we need to start embracing the idea of reuse and regeneration. And one of the books that I always give the people on my team is called Impact by Sir Ronald Cohen. So if you guys don't have it, I would highly recommend you all get it. It's a very easy read and it's a very good way of understanding where the industry is heading. But one of the quotes that he has in there is eventually all investment will become impact investment. So if you're not on that bandwagon yet, you really need to start diving in on it because it is the future of finance. And on that, I will leave you with just a little bit of contact information. So please feel free to reach out. And we're just getting started here in Scotland, but hopefully we'll be coming to your community soon as this global reuse revolution begins.
Thank you so much, Dr. Catherine, for joining us at this summit and speaking on this very important topic. As you said, this is not just a problem in Scotland, it's a global problem. And I'm sure the solution is something which every community in every part of the world needs. And I'm sure our viewers would really have got excited by listening to whatever you have shared now. And this is amazing work you're doing, Dr. Catherine. All the very best for your future project as well. Thank you once again for joining. And next, we have a session by Mr. Michael Reda on accountability for impact, the role of independent verification. Mr. Michael Reda is the president and project father, IBCSD Lab SRO, Czech Republic. He is an experienced business professional equipped with 30 plus years of rich business experience. Back in 2013, he invented and developed the systematic waste prevention methodology called industrial upcycling and started to implement it in the real business and industrial environment of Czechia. 2 years later, industrial upcycling became the groundstone of Industry 5.0, which was launched on December 1st, 2015 by a published article named Industry 5.0 from Virtual to Physical. He held regular webinars and talks at universities, schools, and events all over the globe. And Industry 5.0 became part of the European Sustainable Development Framework introduced by the European Commission. So as it resonates at the ground of United Nations Conference on October 19, 2021. In 2020, Industry 5.0 was named one of the top 10 industrial trends of the decade. Let's listen to Mr. Michael Reda as he speaks on the topic, accountability for impact, the role of independent verification. Over to you, Mr. Reda. I think you have to unmute yourself.
Thank you very much. All right, now should be better. I would like to thank you for being part of the conference, and I would like to thank Catherine. I hope she can stay a little bit to listen what I have to say, because she will be probably surprised. As it was said, I will speak today about Industry 5.0 accountability for impact and the role of independent verification. My name is Mike Rada. I am human, and I'm the founder of Industry 5.0. But before I start, let me ask you two questions. The first one is who we are, because we collect many titles. We are managers, president, investors, chairmen, students, producers. We are teachers, fathers, and mothers. We are collecting many titles during our life, but we have one big issue, that we are forgetting with every single one. We are forgetting that we are human beings. Living ones, not like this man on County Out of Pilsen Brewery. And if we do know who we are, let me ask you the second question. Where do we live? Because we live in beautiful cities like Roubaix, Pilsen, Paris, Brussels. We live in beautiful cities which we fill with trash. We work in factories which produce in one day more trash than a city in a month. We produce products which frequently before reaching the end user become trash as well, and we store them in big metal houses filled with air, calling for more big metal houses to store the waste inside. And at the end of our shift, we leave next to the output of our production, and we arrive home, and maybe we realize that something what was called food before, it's called bio-waste today. And we look at the red sky above our heads, and we ask ourselves, where do we live? This keynote will answer this question to you. But before it does so, let's speak about what is impact investment. And because it was said already, it's not needed to be repeated. What needs to be said is, what is the reality? I was born on December 24th, 1971. At that time, our planet was called blue marble. But in 2019, the planet was not blue anymore. It was covered with environmental damage. But in 2020, something strange happened because the blue phase show up again, not because we changed our behavior intentionally, but because virus locked us down. We live on a planet around which we have been able to establish within few decades' time a global landfill with 170 million pieces of space debris. And what we do to the planet? We dig inside. Because the only criteria of success become more money, more people, more businesses, more cars, more houses, more families. Ask Fortune 500 members. Ask Elon Musk, Jeff Bezos, Bill Gates, how they get to the ladder. We are living in one planet together with 7.960 billion people, not knowing that 200 years ago it was just 1 billion, and 100 years ago it was just 1.5 billion, which means in the last 100 years, the human population on a planet fivefold, despite 2 world wars, 2 world pandemics, and more than 650 local war conflicts. And in 2050, as it was said before, there should be up to 11 billion people living on the same planet. And just now, please remember the last image. We are living here in 206 countries, according to UN 193. We are speaking 7,000 languages. We are riding 1 billion cars, and we let 9 million people dying hungry every year, despite the fact that we are throwing away 23 million tons of crop and food every single day. We let 800,000 people die thirsty, despite the fact that only California crude oil industry consume every single day 347 million liters of drinking water. We plant our food to throw it away because for the buyer in a chain store, the leaves are not green enough. We put our overproduction in a rivers on a landfills, not to spoil the market price. We carry our water in firefighting tanks, not knowing that the same amount of water is needed to produce just one and simple hamburger. And we do it on a planet where one sip of water can save not one, but 2 lives. We work in a factories which has walls lined with environmental certificates, and behind the walls, the same factory create a landfill. We store our obsolete packaging on a parking lot of employees, waiting till it becomes waste. We throw away in a landfills products which are not perfect for one, but can suit well hundreds and thousands of others. And we do it under the supervision of World Bank, which says that till 2050, the waste volume should grow. In the same report, it was said that almost everything can be reused or repurposed, but in fact, only 13.5% is being repurposed. This made the waste industry the 3rd most profitable industry in the world, just after war industry and crude oil industry. What is Industry 5.0? It is the first industrial evolution ever led by man, by human. It's based on the principles of systematic waste prevention, launched on December 1st, 2015, and it recognizes and prevents 4 types of waste: physical, social, urban, and process waste. And its principles has been already implemented since 2013. And it's prevented already more than 1 million metric tons of products and material to become waste. We are speaking about impact investment, but we never spoke about fails. Let's do it. The Ocean Cleanup Project collected $75 million to clean up the big plastic Pacific garbage patch. Since it begins the operation, the garbage patch is growing. The project failed. Carbon emission trading, billions has been invested, and emissions are permanently growing because it's not the tool of ecology, but economy. Industry 4.0, billions of euro invested to find out in 2020 that the industries are weaker than ever. Carbon capture project in Greenland, $15 million invested to find out that it captures less carbon emission than one US citizen produces in a week. H3DA battery, $10 million invested, production never starts. It was failed. World hunger ends. Elon Musk promised $4 billion to pay off his money. He never transferred a single penny. Instead of that, he proposed to buy Twitter with $43 billion. Right now, he's at the court. What is the reason for the fails? Firstly, the evaluation was made on promises and estimates only. There is no responsibility or obligation by project owner. It's marketing-driven society demand, which has nothing to do with the real demand because it's done by people who does not know anything about the real life, living in a very different world. The tax deduction for impact investment is a very interesting way how to save money. Backed up by global bodies like United Nations, European Commission, World Economic Forum. Government-led investment. Government invested only, the politician invests only citizens' money, but give a big care of their own. No binding result has to be delivered when you invest it. So I was asking the 9 years many times, what is the value of Industry 5.0? We spent 5 years to calculate a number which was introduced in 2019. It was $475 trillion at the time. This is a global saving which can be achieved per year. And already in the first year of implementation, you can save up to 50% of your waste management cost. But this number is unfortunately no more valid. Why? Unfortunately, it's much more bigger. Because of the war in Ukraine, not a single bullet will be reused. and not a single human life lost will be recovered. The need of independent verification is here because it should be done by third-party independency, and the independency should be defined by the core business of the evaluator. The objective review should be done by those who does not been given the answer before, which is not the case at the moment. Not proof of concept, but the results delivered should serve as the proof. The full responsibility for delivery by fund receiver, and there shouldn't be impact investment, but impact partnership instead. The transparency, which was mentioned several times before, should be there instead of NDA, and only palpable results that can be touched should be understood. We can use a rope for a change, and let me explain with this rope how different system works. You can put the rope to change the planet in a circle, and you put people around, and you tell them pull. But if you do not tell them when, the circle will not move. It will stay as it is staying for 56 years. And if it turns, it just turns around the planet. Or you can use a rope, untie it in a small threads and put the people around. But if you do not tell the people in which direction, in which time, how strong they should pull, the threads will break and there will be no result. Or you can take the rope, tie it to the place, put people around and give them the right instruction to put the rope in one direction in one time. Then you will deliver the change. We have made big mistake because we have built our future on the top of a pyramid, not understanding that the pyramids built by the living ones has been built for the dead ones, to store dead bodies inside. I realized that more than a decade ago, and I decided to build another groundstone, a groundstone which will be stable no matter how strong the economy or the world will shake. How does it work? Firstly, you have to recognize that something must not become waste. Then you reconsider, and the third is the reward. You will probably fail for the first, second, even third time. But if you succeed, you will change the world. And to do so, I have a request for all the participants. Please, do not ask sustainability before becoming sustainable yourself. Reduce financing of papers. Finance endures instead. Do not measure what you cannot measure yourself and eliminate fear from the company and society standard. Don't ask people to run. Let them walk and enjoy the life and work. Take a picture before, you create after. Value humans, not machines and technology, and don't waste time in favor of personal profit. To do so, I have spent 8 years to write the world's first and only existing waste prevention framework. Please do understand, there is no waste if we do not waste. And not a single legislation in the world has defined how waste is being created, so I did it. And again, please do understand that wasting is not a feature of a product or material, but the result of human behavior. Industry 5.0 is the first industrial evolution ever led by man, by human. It is new mindset of people and businesses from wasteful to wasteless. It delivers results without the need of capital investment, and is based on the principles of systematic waste prevention, utilizing existing on-the-ground mines, and based on transparency, profit sharing, and efficiency. And please do understand, Industry 5.0 is not a sales tool or a buzzword. Dear ladies and gentlemen, we are living in an age of digitalization of our work. Our children lived for the last 2 years in a times of digitalization of the education. And our leisure time was digitalized long time ago. So it looks like that the only thing which needs to be digitalized is the human. But if we do so, our work, our home will look like this, because data don't need any light. I realized that a decade ago, and I decided I do not want to live on the bottom of a black hole. And I decided to build another world, wasteless world. And on January 1st started a project called 17, which is a global recovery project. Dear ladies and gentlemen, my name is Mike Rada. I am human. And don't worry, I'm not alone. At the moment, there are 108 Industry 5.0 ambassadors representing the gates to wasteless world in 108 countries, giving the access to systematic waste prevention to 89% of global population. And I hope that you will join me, because many of your projects I see are contributing to wasteless world. Have a nice time, free of waste and wasting in all its forms. Stay safe and free. Thank you.
Wow. Thank you so much, Mr. Michael Rada, for that very powerful and impactful session on a very important topic. Your presentation was really thought-provoking, and I'm sure our viewers will start thinking about what you have shared today and start implementing whatever they have learned. Thank you so much for joining us and inspiring us today.
Thank you very much.
Thank you so much. Next, we have another very powerful speaker, Mr. Girish Bajaj, to talk about the why behind becoming an impact investor. Mr. Girish Bajaj is the Global Strategic CEO, GB Luxtech, United Arab Emirates. He has been in the financial services and investment sector for 25 plus years and has experience and expertise in equity markets, mutual funds, insurance, real estate verticals. Additionally, in luxury sector for more than 25 years and emerging technologies like blockchain, AI, DeFi, AR, VR, XR, NFT, metaverse, wealth tech, reality tech, etc. for 5 years, focusing in the future on space tech and defense tech. He is an inspirational and entrepreneurial leader, leading from the front with commercial instinct and a positive attitude, believing in an engaging and challenging approach. Over to you, Mr. Girish Bajaj, for your session, the why behind becoming an impact investor.
Thank you very much, everybody, and thank you very much, GCPIT. I'm just going to do, this is going to be a bit of a lengthy presentation, but I will go a bit quick. So the reason is that today impact investing is getting, I'm just going to have a disclaimer that this is not any way to promote any companies or investing in the entire impact investment space. So please do not take it as any way of promoting from my side. Now, the main purpose of impact investing is basically to not only about making profits, it's about giving a positive contribution to society, as said by a BlackRock CEO. So there is a sense of purpose, but it's not only about making financial performance for the shareholders and stakeholders. It's about giving a positive contribution to society. The idea of impact investing is an investment strategy and approach which has to be carefully designed and calibrated to your end result of advancing social and environmental solutions to investments that also produce financial returns. The idea of, again, is of impact investing is to use the money and investment capital for positive social results. And defining impact investing will be as by Global Impact Investment Network is made into companies, organizations, and funds with the intention to generate a measurable, beneficial social or environmental impact alongside a financial return. This word measurable is very, very important in impact investing. This is basically just a spectrum of how the traditional investments are done today and moving towards a more sustainable and impact investing. The slide will be sent to everybody in the future. I'm sure you'll be able to have a look at it and understanding the risk managements and the opportunities and the entire ecosystems, who's involved, how they fund it, everything. I'll just talk about it more a bit now. The industry has been estimated to be around $502 billion in 2018. by GAAIVCN, which is the Global Impact Investing Network, a very, very influential network in this space globally. And from $228 billion in 2018, there has been a lot of investment still continuing every year, which goes up to anywhere from $500 billion to $1 trillion per year. The investment which basically latest estimates say there's $2.3 trillion were being invested for impact in 2020, of which $636 billion have impact management systems. Now this impact management system is something which is clearly measured, and there are some KPIs for that which will be shown now. And the top 5 impact investing firms are given as below. The tremendous potential is there currently, as $10 trillion, which are actively managed, will slowly move towards the impact investing. This is basically the way how these different type of funds are basically investing in the impact investing world. So you have intent and measurement funds, you have pure intent funds, and you have private funds which are investing. There are different amounts being invested. The total comes to about $2 trillion. These are the breakdowns of the type of funds which are there, who are currently investing. And this is growing every year again, like I said, from $500 billion to $1 trillion, maybe a bit more. These are the privately managed and publicly management funds, which are again having breakdowns of the measured impact and intended impact funds, and which comes to about 2.28, just same amount as given as earlier of 2 trillion. Now, the impact investors have to measure, monitor, and verify and disclose their impact for creating market standards, and at the same time for potential stakeholders who want to enter and invest in the space, which could be everybody from banks, pension funds, UHNIs, family offices, and the others, which I'll talk about it now. So impact focused investing, or simply impact investing, is an investment strategy that seeks to achieve social or environmental goals as well as generating profit. But unlike philanthropic endeavors, impact investors typically expect a return on their investments. Along this may be a secondary consideration. The range of return expectations for these asset classes for impact investments, they range from anywhere from, as called concessionary funding to risk-adjusted market rates, which could be your 10-year yield from the government bonds. It has been proven that the returns are pretty good and a lot better and very steady and non-volatile compared to investing in equity markets and other asset classes. So whether they are equivalent to fixed incomes or venture capital or private equities investments, they have been not very outperformed in a lot of the cases, but they are very steady in terms of giving returns and non-volatile. So this is a way to see in a way the returns being given and the types of impact investments which are there. So you can have it sustainable and at the same time concessionary, which basically in terms of the returns given by the impact funds and how they go compared to traditional investing, which becomes very high risky at the same time. Now, this is another chart showing the same thing where you have different funds which are investing in impact businesses, and it ranges from the charity to traditional businesses. And at the same time, your returns will vary, and at the same time, your risk increases. So where certain funds, when they're concessionary, like banks and pension funds, will invest in these businesses, even though they may be very low returns and maybe losses also, but they are inclined to do so for the benefit of the society. So most impact investors seek returns that are comparable to market rates, and some impact funds can even outperform the market. The medium impact fund had a median internal rate of return of 6.4% compared to 7.4% from non-impact seeking funds. Now, impact funds, which have been associated with ESG as socially responsible business practices, are gaining increasing attention in the business world. While they have many features in common, they refer to distinct practices. The ESG practices refer to business decisions that could affect the returns of that company. Now, this is very critical to understand what ESG does and what impact investing is. So, for example, a company that knowingly employs child labor or engages in discrimination could be at a competitive disadvantage, particularly when marketing to socially conscious consumers. So, businesses in this segment and the funds who look at this investments will not invest in these kind of businesses and practices. And impact investing, on the other hand, is the practice of seeking investment that specifically optimize a goal other than profits. So that's a very main critical here, the optimizing the goal. Now, this goal will be investments to for clean energy, for education, or in microfinance. So impact investments are investments made with the intention to generate positive, measurable social and environmental impact alongside a financial return. So this is very, very critical, that optimizing the goal and profits is not the priority here. Profits is important, but it's not a priority. Like I said, in terms of what ESG is, that it might be in it won't be ethical business that certain investment funds will go for that. So impact investments and investments made with the intention to generate positive, measurable social and environmental impact alongside financial return is the main key here. These are the phases of how the industry has grown from what, say 15, 20 years back and going in the future, how it's going to mature, how the mainstream players will be entering the functioning market, more sophisticated players will be entering the market, and the millennials will also be entering this market as they're getting more and more conscious. And it has been in the research report in terms of the wealth industry, by 2030, the millennials will have about $50 trillion of wealth to invest. And so it's already seeing a lot of these investors investing in impact funds now, and the future will be belonging to them. So they are getting a lot aware of the conditions in terms of the climate situations and other factors in the global economy and how it's affecting their lives. They'll be more and more basically inclined to invest and more aware of the impact investments. So whether investments fund is something to look into seriously, or is just way of politics playing with it, it's basically a personal choice. The intent is always there for the impact funds, so to improve social and environmental outcomes. The contribution is there, the investment capital is available, whether it's a pension fund, banks, or family offices, or foundations like Bill Gates Foundations or the BlackRock Foundation. So you have a lot of these sophisticated and the top people of the world. Knowledge transfer is also there, and it's required today that how best to deploy and in the right segments and sectors to improve the life of everybody, the humans. In terms of measurable, it is the creation or improvement of the markets, improvements in enterprises' outputs or processes, which increases or the improvements in social and environmental outcomes. So basically, the humans live a better life in the future. The key features of impact investing is, one is the generating of financial returns. Impact investing is not philanthropy, generating social and environmental performance. 3 is uses the United Nations 17 Sustainable Development Goals as a roadmap, which I will just show in the next slide. The primary investment focuses on the product service offered by the company and how it is run, measuring social and environmental impact alongside financial performance. Innovation typically plays a leading role here. It's a lot of disruptive businesses have been proven by with the help of technology today, whether it's in for real estate or for space tech or for recycling, for construction, everything. It's a very long-term horizon. The minimum a good 7 to 10 years would be basically feasible. And active ownership engagement is involved. Of course, there are inactive shareholders who are very well active today in this space. These are the Sustainable Goals 17 by United Nations. They are trying to basically completely take it out or reduce it and have a positive impact and save certain species, or basically in terms of even the resources like paper and other main resources. So the benefits of impact investing is aligning investors' financial goals with their values. Here is basically pure asset allocation that most of them are yet not investing in impact investing or ESG. So now they are allocating 5% or 10% of their assets incrementally every year also. And supporting companies with a clear intention of positive impact and high potential for growth and profitability is very important. Investors making investments will be, their intention is to contribute to the positive social and environmental impact using evidence and impact data and investment design, managing impact performance, contributing to the growth of impact investing. Core characteristics are setting transparent financial and impact goals, articulating an investment thesis that is explicit about these goals and strategies to be adapted to realize them, and the evidence and impact data on investment design, identifying a social and environmental need aligned with the empirical evidence currently there, using the best evidence accessible, setting targets of the investment's contribution to improvement of that need, and designing investment strategies based on solutions effective in addressing the needs, identifying the qualitative and quantitative indicators we will use to gauge performance against internal targets. These are ways of how you do the screening process and the teams which are there, and how you integrate your investment strategy with your the impact investing strategy, and what is more priority. The philanthropy is a different aspect too for a normal investor and the professional investors who are basically involved and want to be involved in the ESG impact investing space. Okay. This is basically another slide talking about how you look at approach to your impact investing and what you expect from, in terms of financial return, which is not a priority for impact investing, but how you optimize the social and environmental concerns. So each and everybody will have their own space in this to look into it. So whether it's a fund or a pension fund or a family office or a personal investor will basically have a look into this chart and see where he wants to fit into it and take the long-term view. The top 5 challenges basically for the impact investing industry are one is the capital across the risk return spectrum, just like I discussed earlier. A common understanding of definition and segmentation of the impact investing market. It's very important to do a thorough research of the space of impact investing in the ESG. This entire presentation deck will give you a fantastic view of the future. Suitable exit options, the longer the better, because these are not to be looked into a profit initiative right away. Sophistication of impact measurement practices and high quality investment opportunities. There are a lot of funds which are offering ESG and impact investing, basically ETFs also from all over the world. Go for the top 2 or 3 of them, or top 4. So they could be by Morgan Stanley or by BlackRock, and there are many more from Europe too. So there's a $2.5 trillion annual gap in the funds needed for the SDGs by 2030. Not in required impact investment capital be key, and this is again where the millennials will come in the future, but they'll play an important role in finding solutions to problems conventionally seen as the domain of the public sector. According to 2018 survey done by the Global Impact Investing Network, the following barriers are there for approaching capital across the spectrum: a common understanding of the definition and segmentation, suitable exit options, which I just said earlier. But these are the main 4 key to be focused on, and how to basically help the entire to raise the kind of capital required, which is about $2.5 trillion. The growing impact investment market provides capital to address the world's most pressing challenges. And these are the sectors which are very, very focused today: agriculture, renewable energy, conservation, microfinance, basically to affordable, accessible basic services, including housing, healthcare, and education. So as poverty line is again increasing after the COVID and the current war going on, there has been a very big tectonic shifts in supplies of agriculture and other resources, which is having a big problems for governments to allocate more funds for, by giving out subsidies now. So this is where impact investing will take a big role there now. Social responsible and environmental, social and governments investing are two approaches to impact investing. SRI and ESG, according to global GAAIVCN, 80% of impact investors reported that the investments met or exceeded the expectations. So earlier when I spoke about the returns, the median impact fund has given 6.4 return compared to 7.44% from non-impact funds. These are they're not as much as volatile as a normal funds which you invest in today in the equity funds. So that's again very important today. So in recession times and in bear markets, they will still give you steady and better returns and not as volatile as a normal equity return. Investors who use impact investing as a strategy consider companies' commitment to CSR very, very critical, or the sense of duty to positively serve society as a whole before they become involved with that company. So they do the research and they see that how many companies are being serious about CSR and are they allocating to it. And technologies use this for CSR basically to monitor. So you have technologies like AI and blockchain, which is being used today very actively. Type of funds, type of impact can involve impact investing varies based on the industry and the specific companies and the sectors and how they're sensitive to government policies and the competition from outside the country they're based. The opportunity for impact investments varies, and investors may choose to put their money in the emerging markets or developed economies. So in asset allocation, when you're investing in ESG impact funds, you can invest in your own country funds or emerging markets or global funds. There are many ETFs available for that too. So the main industries are focused on healthcare, education, energy, which is of course especially clean and renewable energy, and agriculture. And how do investors approach to it, and how do they measure? They reflects investors' goals and consequently their intention. So the best practices to be followed here are establishing and stating social and environmental objectives to relevant stakeholders, setting performance metrics, targets related to these objectives, monitoring and managing the performances of the investees, and reporting on social and environmental performance to relevant stakeholders. So of course today, if you see, you have like every country's stock market have the regulators. So regulators play a very important role in while they monitor that how much is spent by on CSR by corporate, which is set by the government of India. So in India, it's 5% of the profits or turnover. So there are different countries may have these basically allocations that you have to compulsory invest in CSR that basis. These are just basically how the movement of capital works and is converted into being effective for the social and environmental for the community. So how enterprises and asset owners and asset managers, the fund managers play a role, and how the advisory services help in raising the money. So who's making the investments? Like I said earlier, it's everybody from family offices, NGOs, religious institutions, diversified financial institutions, banks. This is the significant, basically how the risk are there, financial risk are there, which impact investment portfolios. So the business models and execution is very critical. And please study this carefully once you get the presentation. And these are the progress over the past decade on how the indicators of the market growth has been. So research still is very important, and the sophistication of the impact going right to the something which is the government support by the market. So remaining challenges of the market, which I said earlier, and this is basically how it is significant and how it's moderate, and how you can decide what is important to, the factors important to choose a good investment fund for this. whether it's ESG or impact fund. Greatest challenges facing the market over the next 5 years. So impact washing is something very important to look into. Second is the inability to demonstrate impact results, inability to compare impact results with peers. Comparing the results of returns with other funds is something very tricky in this kind of sector, because in impact investing for agriculture, for renewable energy, there are two different returns you can get on the profitability of the industry and what they actually would like to do for the society. So it's a good way to understand and study it. 2015 report by Gunnar and Timo, where they said it's a non-negative relationship between investing along environment, along ESG factors and corporate financial performance. So there is no way it's linked to something the entire markets or the other assets you invest in. And this is a research done for 44 years. So, and it concludes that 90% of the studies found that ESG investing and financial performance do not hinder each other. Harvard Business School did another study where they said after 20 years, if you invest $1, you can get $14.46 in a normal in an investment fund. If you invest in something which is for environment and social causes, you have on $28 compared to $14 and in 20 years. So this is something to really look into it, to allocate your funds, as a corporate or as a fund or as an investor, or basically individually or family office, and that long term you need to allocate, and it basically makes your entire corpus less volatile to markets, vagaries of the markets. JP Morgan also found that 55% of the impact investment opportunities result in comparative marketed returns, and reveal that portfolio performance for impact investments overwhelmingly met or exceeded investor expectations. It's another way of to know the direct contributions to the roadmap actions over the next 5 years, broken down into how you analyze it, and you do your own strategies for your own investments, understand this sector very, very deeply. Okay. Some general guidelines the Global Impact Investment Network has set up is declaring your own social objectives for investments, using standardized metrics, utilizing KPIs, and reporting the performance in the context of the metrics. John Goldstein, of the MD of Goldman Sachs, said impact investing started with passion. Its continued growth and success needs to also be driven by performance. This is another way, same way to basically connect it to this one, but more not very concise, but just giving 6 basically metrics to look into it. Policy regulation is very important here, which is driven by the government and the regulators set. Investors have their own expectations, the products, what they invest in, or the services. Tools are there. Education is very important, and the training, which is picking up a lot. It's a very big industry now for ESG and impact investing. Blockchain is, like I said earlier, technologies which are helping to get into impact investing and to monitor the end use of the funds, and how it's there's no corruption involved. Blockchain is the best technology to deploy. So with ample potential to improve the impact of ESG and impact investing, and which increases efficiency and transparency. The critical component necessary for the collective success of investments and investors are trust, decentralization, cryptography, and traceability. In blockchain, which is basically a series of blocks. So every block has a transaction of what you have done in terms of investing, and how that investment has been deployed. So every money, suppose there's a $50 million fund, and you invest $1 million from that fund to for something in say education. So There is a consensus which is there in blockchain. So there could be 2 or 5 parties involved in that, and at the same time they decide that this $1 million will be invested, and these are the parameters to be looked into it. So this consensus approach is very important, and you can track this entire way of funds being deployed right up to the end use. So going to a NGO and exactly which individual or human has that money has reached in the way of food or whatever or education, it can be traced, and it's fully cryptographic, fully immutable. It cannot be hacked, and blockchains can be have in terms of a private blockchain or a public blockchain or a private public blockchain, which can be decided depending on the anti-impact investing, who are involved in it. The government, the corporates, private sector, public sector, depends. So management of assets projects for impact investments on blockchain have a number of advantages from which impact investing could potentially benefit. There's greater transparency, enhanced security, improved traceability, increased efficiency, and speed of transactions, and reduce cost. Blockchain takes out a number of intermediaries which are there in current businesses. That is very helpful for, so the transaction cost, processing cost comes down anywhere from 30 to 70%, maybe more. Smart contracts is a code which is used to basically monitor the deployment of funds to a macro level, which makes again the entire process very smooth and cuts down the cost. Managing assets on blockchain, like I said earlier, so the tracking of the entire your transaction and the deployment of funds, or even the your supply chains of saying on the basis of ESG is fully trackable. So even going right back to the saying that if I'm in a garment business and I want to invest in a garment business, I want to trace whether this is fully ESG compliant, it's fully biodegradable. So right where I buy my cotton from, I buy everything, the thread, and even the labor I have used, and there'll be no child labor, I can track it on the blockchain, and there's no way anybody can tamper with it. So trusting the impact of sustainable development initiatives in developing countries is very important today for this for impact investments, and tracking the impact of the investment increases trust between users and stakeholders. The key feature of blockchain technology is that it automates the creation and management of verified data using a decentralized approach. So blockchain data, which is immutable, is only as accurate as the data that companies provide. Validating data, consensus protocol provides clean data. So the lack and a high cost of trustworthy data is solved. Data, which is very important today for any businesses, so even for ESG and impact investing. In blockchain, like I said, it's a consensus approach. Every entry I do on the block, it's approved by, depending on the entire stakeholders involved. Once I approve that data, everybody says yes to it, it is recorded. So I clean out all the bad data and the bad decisions I need. So that data makes on the blockchain makes it much more easier for me to make a decision and how to deploy and invest the funds. And in terms of research for ESG and impact investments, for industries, sectors, it makes it very, very easy and convenient. So affordable and approved data on the actual social or environmental results and impact of an investment with decisions making faster and reliable. Lessens the need for trust because of the consensus mechanism, thereby reducing the risk exposure. Now, this risk exposure will, once I decrease my risk, I increase my returns. And it's proven that the returns are as comparable to a risky asset. Unverifiable impact claims become less of a concern when blockchain technology automates impact verification and measurement and speeds up the and otherwise slow and expensive process too. So the validity of my data is done, which is very critical for any decision making. So I don't have any corrupt data, I don't have any bad data. And that makes decision making fantastic and superb. And that's what's required today. And blockchain solves that now. So use of blockchains mitigates the need for trust due to its built-in trust-generating features, thus reducing reputational risk exposure from university claims, from unverifiable claims, sorry. Blockchains help automate and accelerate impact measurement and verification. So this is something more about how ESGs and SDGs use blockchain. And now, of course, you have a lot of the hedge funds in the business also, and ETFs. So ESG efforts are closely tied to the concept of impact investing, in which both individual investors and investing institutions such as mutual funds, hedge funds, ETFs, in hedge funds attempt to create an investment strategy that aligns with ethical and measurable goals that can help improve the well-being of various populations as well as planet as a whole. Blockchain has something called tokenization of impacts, where tokens are created for a wider, wider base of investors can invest in projects now. So there is no need today that I need to have minimum raise from investors, say $100,000 that can go down to $1,000. So there will be more flow of capital coming now slowly, which decreases the transaction cost at the same time, and mitigating the key investment risk, including liquidity and counterparty risk, which results in lower cost of capital and better access to investment opportunities from ecosystem of capital providers other than within the traditional capital markets. Blockchain technology, of course, removes the higher transaction cost, and monetizing impacts can be accelerated with complete transparency, traceability, and trackability, which I basically mentioned earlier. According to a study by the International Institute for Sustainable Development, blockchain can increase trust between parties, promote financial and social inclusion, improve data collection, and accelerate monitoring, reporting, and verification processes, and incentivize behaviors that promote sustainability. See, this in way of the inclusion is here now. That's where your microfinance comes in for the blockchain, and monitoring of the lending part of it and what interest rates they lend at, the period that they lend at, the NPs which are there. All this blockchain solves in a very efficient manner. So there's so automatically you have a lot of financial inclusion and social inclusion. So countries like Africa and Brazil, they are using now blockchain slowly, and microfinance is spreading a lot there, and even in India. That's it. This is what I need to say about impact investments and SDG and ESG.
Thank you so much, Mr. Girish Judge. Yes, thank you so much for the detailed and informative session on the why behind becoming an impact investor and on the benefits of impact investing. Looking forward to working with you in the future as well. Thank you so much for joining us.
Thank you very much.
Now we have one more global impact startup presentation on scaling impact by Chanukya Patnaik. Mr. Chanukya Patnaik is the founder and CEO, DFA Belgium. He is an entrepreneur, problem solver, data scientist, and marketer who is passionate about education and AI and loves solving meaningful problems that make a positive difference. He is currently building DFI, a thriving 100K plus global AI community on a mission to educate and build AI for all. This is a great community who enjoy learning, sharing knowledge, and love giving back. Previously, he has led high-impact lean teams across various startups and has always enjoyed building communities. Over to you for your session, Mr. Chanukya.
Thanks a lot, Aparna. I hope my voice is audible.
Yes.
And
perfect.
yeah, before I kickstart with the session, I have a question for all of you. How many of you truly believe AI is going to solve some meaningful problems out there? And probably you can help me with a yes or no on the chat. I'd be happy to look at the responses. Maybe meanwhile, I'll probably start sharing my screen. I think we already have a response. Thanks for that. And okay, and then there are also a few more responses. Okay, there is a no, there is a yes. Okay, well, I'm sure there might be some more responses kicking in. I'll probably keep it short and try to wrap the session very soon. And also, if you have any questions at the end of it, I'll probably open up a 5 minutes window for Q&A. And yeah, as I said, I was just asking and checking whether each one of you would believe in AI solving some of the meaningful problems out there. There are some yes, there is no. But most of you, as I can see, most of the yeses like most of you believe, it's going to solve meaningful problems. The entire world, or most of the companies and institutions out there believe that artificial intelligence is going to transform the world. And that's where we see some meaningful investment flowing in, where we have seen over 340 billion being spent by companies in 2021 alone. And we saw about 66% of the companies are either executing or planning to apply AI at scale. And you would also see a contribution of 15 trillion to the global economy by AI by 2030. That is the massive impact artificial intelligence is going to have on the entire world, right? So these are some of the very positive sides where we think it's going to be the new electricity. But on the downside, when we look at the things at the ground impact level, there is still limited awareness of data expertise. There is lack of awareness of data practices, shortage of industry-ready talent. And right now, AI development and research is extremely costly and also time-taking. And to be honest, we are very far from harnessing the full power of AI at the moment. And that's where we see over 85% of the AI projects fail to drive impact. And then that's precisely the problem we are trying to fix at DeFi by building a thriving global community with a purpose to educate and build AI for everyone to solve meaningful problems. And on one side, we have a community-led AI education platform where we bring together some of the finest data science leaders and experts to offer free courses to the community. And that's where, many thanks to some of the data science architects and leaders who have come forward to make this happen. And this is how our platform looks like, where you can enroll in any of the courses, challenges, or anything of that sort. And it's available for free. And our purpose with our education platform is to democratize AI education, where it provides literacy, and also not just it stops with literacy, but also we would push our community to utilize those skills to solve a meaningful problem. And that's where we have another platform called as community-driven AI marketplace, which is envisioned to solve meaningful social and business problems, which are developed by some of the best data scientists in the community. And to talk about a bit more about the community-driven marketplace and the kind of impact it has driven to the world right now. So, technically any company or any NGO, organization, institution can come and probably host a challenge on our platform. And that's where, we have collaborated with some of the impactful organizations. So, for example, we collaborated with this organization called as AETA to predict earthquakes a week in advance to save millions of lives. And here, we are not solving the problem. We are bringing together some of the best data scientists out there in the world to solve this particular meaningful problem. And then we don't charge for this kind of challenges because it has a very high social impact and it's going to save millions of lives. And similarly, we have hosted several other meaningful challenges like this. And another meaningful, impactful challenge that impactful organization that we are working right now is with one of the NGOs in Andhra Pradesh, where they are trying to build AI-powered lens for the blind. And it's called as SMAC. So basically, their big vision is the founder himself had to go through a series of events and had to discontinue his education due to an accident where he lost senses of his limbs. And instead of sitting idle and just being feeling sad about what has happened to him, he took the onus on him to make inclusive society where he wanted to ensure that all the disabled people are less dependent on others. And that's where he started building products. And one of the products is AI powered lens for the blind. It's an NGO, and he wants to make it extremely affordable so that some of the people out there who are facing challenges with this can actually have access to this lens and probably have a feel or a sense of the world in a meaningful way. So that's some context about how we are trying to surge innovation and solve meaningful problems with our community first approach with our marketplace. One side, we are providing AI education for free, and on the other side, we are building a marketplace where we are solving meaningful social and business problems with the help of the community. And with that, let me talk a bit more about the inception of DeFi, how it started, why it started. Well, it was back in 2018, where I moved to Belgium to pursue my master's. Before that, I was associated with some of the startups like Internshala and CoachChef. Internshala had this big vision of making meaningful internships accessible to every student in India, and that's where I had spent few months in trying to impact and build that particular vision. And at the same time, I spent significant time at CoachChef to provide, to promote open education in coding. And we have been able to create a massive community of 2 million plus programmers, predominantly from India and across the globe in 180 plus countries. And when I talk about open education, right, it's all about providing free coding education and also making it accessible to every student out there in the country and across the globe. That was what we were doing at CoachChef. So predominantly into communities, education, and all. And it was back in 2018. There was a lot of hype about data science, AI, that was there from a very long time. And that's when I also learned a lot more about data science and AI. And I wanted to pursue a formal education, thinking that I'll utilize this particular skill to solve some of the problems out there. This was the perception I had. And I started my master's. And after that, I went on to be a part of founding team member and data scientist at CompuData, where we were helping financial institutions fight financial crime. And when I talk about fighting financial crime, we were actually applying ML solutions to basically detect suspicious activities like terrorist financing or money laundering or anything of that sort in the bank transaction network. So this is what I was doing there. And while I was working with some of the leading banks out there, I realized close to 70-80% of the projects are not taking off or not actually driving impact. And not just in this particular industry, I spoke to several other peers and data science leaders, and I realized most of the data science projects doesn't take off and doesn't productionize and doesn't drive real business impact, where they're splurging literally millions and billions without any tangible impact. It was a very eye-opener for me because I always thought I can utilize this particular skill to solve some meaningful problems, but now the reality is something very different. And that's where the idea popped up where, okay, well, I may not be able to solve all the problems out there, but what if I build a community and provide them with right platform to educate themselves and also utilize those skills to solve meaningful problems. So that's where the idea of DeFi started, where we started as a small community and we collaborated with some of the finest data scientists across the globe to start and started with a 5-week data science bootcamp. It was just started as a landing page and the YouTube channel where we invited close to 18 data scientists across the globe to share their expertise with the community. We were very thankful for them to coming so that they came forward, like many of the speakers right now in the summit came forward to share their learnings, right? Similarly, these are some of the data scientists who have been there, done it, who have been there and solved some of the major problems at scale. They have come and they have shared their experiences with the community. That's how DeFi Inception has started, where we thought, it's not just I or the entire team may not be able to solve all the problems, but what if we build a community so that they can educate and build AI for the people, by the people? That was the concept. And that's some context about DeFi story. And there we have come a long way. We have built a massive community of 100,000 people. As Aparna has initially mentioned in the introduction, all of these people, they love contributing back to the community, learning together, growing together, and making a meaningful difference to the society and also solve some of the business problems out there. And at the same time, we have seen so many other things that are happening. And along the journey, we have hosted over 100 plus AI challenges. Most of them are impactful societal related challenges. And we hosted over 70 plus free boot camps and courses. So that's something that we have done. And with the kind of traction we have received, we have also got some recognition from some of the renowned names out there. And we are we are considered as top 10 communities in the world when it comes to data science. And with that, I'll probably quickly summarize the entire thing right now. AI is transforming the world, and not just that. If I have to talk logically with each and every one, I think though we may say that we don't know about AI, but actually tactically, all of us are using AI in one form or the other. Maybe if some of you are using a fingerprint sensor in your mobile phone or a face recognition face recognition feature on your phone, that means that you are inherently using AI to open your own phone. You are actually feeding a lot of data, and you are basically like, getting something out of it. Basically, when I say you are getting something out of it, you are opening the phone. And similarly, like, there are so many applications that are powered by AI. So everyone literally, like, with the rapid evolution of AI, the companies and also individuals need to understand the basics of AI. They need to understand what kind of data they are entering into the applications and what they are getting out of it, because it's going to have a very significant impact on all walks of our life, not just our personal life, but also professional. When I talk about personal, it can be something related to mental aspects. It can be related to anything else. So we need to understand, we need to have that basic education and basic AI literacy, data literacy in each and every individual, so that we are more prepared for the AI era. And that's where we are playing a key role in terms of making AI accessible to everyone, where we are trying to educate and also develop AI for the people and by the people. And yeah, I mean, that's where, like, we are looking forward to. I mean, I hope, like, the entire community comes together to make a positive impact by educating and building AI for the people, by the people, and so that it will go a long way in shaping the future and making a meaningful difference out there. And with that, I'll sign off with my session. And thanks everyone for joining in, and have a great evening or great day for whichever part of the world you are in. And these are my coordinates, and would love to stay in touch over LinkedIn or whichever professional connections that you would like to network you would like to. Thanks a lot. Yeah.
Thank you so much, Chandrakya, for that very impactful and very powerful presentation on the power of AI and bringing in examples to show how AI can help in creating social impact. I'm sure our viewers will start saying yes to your question after this session. Wish you all the very best for your future projects as well.
Thank you. Thanks a lot. Yeah.
Thank you. Government's importance in the next decade. To speak about this topic, we have with us Ms. Fatoumata Gaye joining us from Gambia. Ms. Fatoumata Gaye is the CEO and Principal Consultant of Thinkline Consultancy, a business consulting company, a public speaking and self-development coach, and also the founder and president of the International Young Mothers Association. Through her work with IYMA, she has gained international development experience and have worked with several mechanisms and different ecosystems. Being an independent professional has given her the opportunity to work with different individuals from around the world, and she has gradually made her leadership presence felt in entrepreneurship, administration, education, and health sectors in both regional, national, and global levels. Over to you, Ms. Fatoumata Gaye, for your session on government's importance in the next decade.
Thank you very much, Ms. Kuma, if I pronounce that right. First of all, I would like to thank the GCPI for this opportunity, for allowing me also to speak on government importance in the next decade. I would also like to thank all the leaders who are speaking here today. Thank you all for your participation, and thanks also to everybody that is listening to this. It's indeed an honor to share a platform with great leaders and impact investors from different parts of the world to address different platforms in our various ecosystems. As a communication head, a public speaker, a youth activist, a child rights advocate, an entrepreneur, and also a woman leader, I think the GCPI did a great job with by organizing this event today. I will give you a quick introduction of my organization. The International Young Mothers Association was founded in 2020. It's quite very new, but we have done a lot of activities in the ecosystem as well. And we are looking on extending to almost all African countries at the moment. It is a female-focused organization that foster innovation, entrepreneurship, and leadership. Can you turn to the next slide, please? Ms. Kuma? It is a time and a place for children and their guardians to connect with peers, find resources, and assemble skills to enhance their lives and relationships. It is a movement that is created to foster and elevate digital transformation and accelerate economic development. Well, usually I would say, what's the importance of the government? in the next decade. But we want to know exactly what is the importance of the government themselves. For me, I think in most cases, the government will provide parameters for everyday behaviors for the citizens. They protect them from outside interfaces and often provide them with well-being and happiness. In the last few centuries, some economic thinkers have advocated that the government control some of the aspects of the economic as well. But there are always some features and characteristics of the government, like they make laws and regulations, they defend countries, they collect taxes, they create jobs, they decide on how much money should be circulated in the economic. They have the power to spend money on public goods, services, and education and healthcare and security as well. So we are all living in an era of phenomenal change, mature democracies, emerging politics, and least electoral competitive countries are now facing new challenges in globalized world. They are delaying with technological breakthroughs, changing into global economic empowerment, aging population, and urbanizing of their territories. Today's picture shows that social inclusion seems to be unfulfilled promise and social cohesion in weakening. Some citizens are actually disagreeing and political systems are having trouble adapting and responding to new demands. In different reports that I have worked on and seen in the past, they draw heavily from the results of an intensive design thinking workshops led by global leaders, strategy and leadership development unites in high government officials. They have also brought ideas on the table. They have workshop participants who explore how the political system can confront disruptive rather than gradual change worldwide. They engage in strategic foresight exercises. This involves thinking through various ways the future might unfold. This is held in some critics that in modern industry societies, consumption exists for the sake of justifying production, rather than the production of being carried out in satisfying consumers' desire. These arguments are powerful, challenging to those who see growth as the most important economic goal of modern society. The Agenda 2030 is a plan of action for people, the planet, and prosperity, but most importantly for women and children, because they are usually the most vulnerable when there's poor governance. But we all know that it also seeks to threaten universal peace and large freedom. We recognize that eradicating poverty in all its a form of dimension, including extreme poverty. It is the greatest global challenge and vital requirement of a sustainable development. All countries and stakeholders acting in collaborative partnerships should implement this plan. As leaders, we should all be determined to free the human race from heavy-hand poverty in order to heal and secure our planet. How can we make a difference? That's a question. Well, in certain cases, I would say people need to be determined to end the poverty and hunger in all forms and dimensions, so they could ensure that all human beings can fulfill their potentials in dignity and equality in a healthy environment. And also, in some point, the planet also should be determined to protect from degradation, including through sustainable consumption and production. I've had some speakers speak about some really important things, and I'm glad that they were able to highlight the waste of food, like Michael Rada did, the waste of food and how people are dying of poverty when tons of food is being wasted. Prosperity, people should be determined to ensure that all human beings can enjoy prosperous and fulfilling lives that social and technology progress occurs in harmony with nature. But if people will come in with solutions, why can't government do that? So the question is, how can the government come in? The government should bring peace. They should be determined to foster peaceful, just and inclusive society which are free from fear and violence. Sorry, it's raining in Gambia, really heavy rain. There can be no sustainable development without peace, and no peace without sustainable development. They should also foster partnership. They should be determined to mobilize the means required to implement the agenda through the revitalized global partnership and sustainable development based on the spirit of strengthening with the participation of all countries and stakeholders across. We should be ready to take a bold transformation step, which is urgently needed to shift the world into a sustainable and resilient path. As we embark on a collective journey, we should pledge that no one will be left behind. The 17 Sustainable Development Goals and 169 targets, which we are announcing to demonstrate the scale and ambition of the new Universe Agenda 2020, we should realize that the human rights of all and to achieve agenda equality and the empowerment of youth, women and girls, and also integrate, join and balance 3 dimensions of sustainable development goals, which are the economic, social, and environmental. The interlinkage and integration of nature for sustainable development goals are crucial importance in ensuring that people have the purpose in a new agenda realized. If we realize the ambitions across the full extent of agenda, the lives of all will be profoundly improved and our world will be a transformation for a better place. I do believe that the only way that we could achieve these goals is through togetherness. So togetherness is our strength. And as global leaders, we should come together to work towards the sustainable development goals. Thank you so much for having me today. It was indeed a pleasure sharing my ideas.
Thank you. Thank you so much, Ms. Fatoumata Gai, for that excellent session. I'm sorry we were not able to put up the PowerPoint. We had some technical issues. We apologize for that. Thank you for joining us today. Thank you. And thank you for sharing your experiences. And with that, we come to the end of this Global Impact Investment Summit 2022. Wow, another powerful day with powerful speakers and powerful sessions. We have successfully completed the 3-day summit, and we hope our viewers got value from these sessions and will think about and put more effort to learn about impact investing. And I think together we can create a huge impact. We at GCPIT are doing our part in whatever and whichever ways we can to save our planet. Hope you will do too. A sincere gratitude to our chief guest, Mr. Don, powerful speakers who joined us today and enlightened us and enriched us with our knowledge, with their knowledge. A sincere gratitude to our chief guest, Mr. Don Williams, and all our powerful speakers who joined us today and enlightened and enriched us with their knowledge. Thank you to our impact investment partner, Tacit Growth Strategies LLC, for their unconditional support in the summit. And a big thank you to our viewers who have joined us on all our social media channels to listen to these powerful sessions. Thank you, dear friends, dear council members, without whose support this summit would not have been possible. But our mission doesn't end here. We will be back with the Global Sustainable Development Summit 2022 in August, where again, we'll be bringing more powerful speakers who will talk about how businesses can support sustainable development. I'm sure this is a topic you don't want to miss. The speaker nominations are open. You can visit our website and self-nominate yourself as a speaker or partner. And let me remind you once again, as Singapore is opening the markets for business post-pandemic, GCPIT is partnering with the Business Show Singapore. Please don't miss this opportunity to showcase your business at Singapore, which is ranked as the most sustainable city in Asia and 4th in the world. Please contact us for more details or visit our website. Till we meet next time, this is Aparna G. Kumar signing off. Take care. Bye-bye. Have a good day, good evening, or good night. See you soon. Bye-bye.